We'll also going to be doing a little bit of audience voting later, but we're going to confine that. We've had a few technical issues this morning, so we're going to confine that to I'm going to ask people in the room to vote by raising their hands. So not much technology to contend with, which is always a good thing, even though one of the issues we will be talking about today is the role that digital technology can play in addressing the issues we're going to discuss. I don't want to say more about the content of our discussion because I want to leave that to our host today. I am delighted to welcome to the stage Dominique Gorsogno, President of the Fédération Nationale des Caisses d'Épargne and President of ESBG. Dominique, thank you so much for having us today. Thank you for hosting this wonderful event, and over to you to kick us off. Is it the mute button?
That's good. Thank you. Ladies and gentlemen, and dear friends, it's a great honor and pleasure to be with you today in Brussels. I want to thank you all. This is a big day. We are going to set together our common position on the subject of women and financial education. We will not be here without the WSBI ESBG teams led by Peter Simon. Thank you, Peter. And I would like to share with you some data and action plans that will form a basis from which to build our future approaches. Let's give a thought to all of the women in the world who are fighting for their right to education, freedom, and to equal treatment. And through them, the right to freedom for all. Before we start, I would like to say a few words about WSBI, ESBG's mission and commitments. The World Savings and Retail Bank Institute founded in 1924, WSBI is an international association that brings together savings and retail banks from 64 countries. WSBI focuses on international regulatory issues that affect the savings and retail banking sector. It provides a platform for the exchange of knowledge between member banks. The WSBA favors inclusive globalization that is fair and equitable. ESBG, European Savings and Retail Banking Group. It's an association that represents the European banking sector, helping savings and retail banks in 16 European countries to strengthen their unique approach focused on providing services to local communities and stimulating small and medium-sized enterprises, and advocate of a proportionate approach to European banking rules. Why are we there today? 17 Sustainable Development Goals were adopted by the United Nations and UNESCO. SDG 4 is the subject of our discussion here today. In 2015, world leaders signed up to the Education 2030 agenda. It's a global commitment to ensure access to basic education for all as a foundation for sustainable development and peace. UNESCO coordinates the international community to achieve the education goals of Sustainable Development Goal 4 through partnership policy guidance, capacity development, monitoring, and advocacy with the Education 2023 framework for action as a roadmap. Sustainable Development Goal 4 aims to ensure equal access to quality education for all and to promote lifelong learning opportunities. A woman deprived of education is deprived of her fundamental rights. Ensuring that all women have access to quality education is essential in respecting their rights and accelerating the construction of a just and sustainable world. A free woman must manage her own budget. A woman must be equal under the law. This is a financial equality, equal pay for men, and women. Young girls and women are in emergency situation. From the outset, they face multiple forms of discrimination and violence. From the 2018 UNESCO statistic, 130 million girls worldwide were out of school. 12 million girls were married early. 18.5 million girls aged 15 to 19 gave birth to a child. 67% of women asked a third party to make their financial decisions on their behalf, compared with 52% of men. These differences correlates with lower overall financial education among women than men, which is found in all geographic areas. In response, international programs have been launched to bring partners on board. Education for Women Now, launched in January 2021, the Education for Women Now campaign is Action Education First Global Philanthropic Campaign. It brings together public bodies like the European Union and private players like the Women's Forum, Microsoft, L'Oréal, and others. It aims to raise 20 million euros to provide 3 million girls and women with access to quality education by 2025. Vietnam, a bilingual program, Vietnam is among one of the main subjects of the which is gender equality. In India and Laos, children aged from 5 to 8 are made aware of this issue early on. Burkina Faso's For Self programs enables 400 illiterate women in Ouagadougou to receive training in leadership, entrepreneurship, support for business creation, and guidance on access to financial service. And of course, the Scale to Save partnership between WSBI and the Mastercard Foundation. Mrs. Angelina Angelo represents this financial education scheme to us this morning. To achieve SDG 4, we must not only focus on access to education for girls, but we must ensure that they start in the school for as long as possible, make progress in their learning, are able to find a job or continue their study. The education of girls around the world is recognized as a key to achieving gender equality. However, it is not a silver bullet. The 2030 agenda recognizes that achieving gender equality requires an approach that ensures that girls and boys, women and men, not only have the same access to the different cycles of education through the completion, but that they also thrive in and through education. Access to schooling is another major challenge, as the cost of education is one of the biggest barriers to educating the poorest population. To achieve this, young women need support outside the education system, and this requires increased foundation for systems and structures that support girl education. Take the example of a study of adolescent education in 4 African countries. In October 2020, the NGO Amplify launched a study in 4 countries, Kenya, Uganda, Rwanda, and Tanzania, on the causes of school dropout among teenager girls and the role of community organization. The study goes out to understand the barriers that adolescent girls would face when they return to school after the COVID-19 pandemic and how these could be overcome. It provides an in-depth community-level assessment of the barriers that threaten to restrict the education of teenager girls and gathers evidence on the best practices for possible intervention at a regional level. The study revealed 5 obstacles to girls returning to school: physical, location, and/or travel; economic, pressure to earn income and/or a lack of financial resource; health, unplanned pregnancy, violence, early marriage, social, family environment, and personal loss of hope, fears and anxiety around being unable to return to school, a lack of trust in the institution of the school. It is, of course, impossible for schools to solve all the problems that every child faces. We need to develop a multi-level approach to finance the education of girls. We have spoken about the need for support in finding solutions to enable access to education for all. Let's look at new technologies and dedicated mobile applications. Can the increasing access of women to mobile phones and the internet worldwide be a possible solution to these inequalities? This is what some of the emerging fintech applications on financial education for women and betting on. They aim to be able to train women worldwide in investment, mechanism, and budget management. 3 such applications are your Juno, MyBexi, Capitana. These financial education and financial management applications are designed specifically for women. They are created by women with the objective of bringing together a community. The values promoted by these applications are sustainability and equality, with a view to increasing the inclusions of women in the financial sphere by training them and guiding them as many tools as possible to better their understanding of these subjects. These tools help to promote gender equality. Financial education is in the DNA for the saving banks and our members. The following are some examples of our ESBG WSBI members in Europe. In Austria, Financial Life Park. Spain, Fungas Educa. Lithuania, Finance Life IWB Initiative. Norway, collaboration with Junior Action. Sweden, the Young Economy Initiative. Estonia, Back to School. Germany, Consumer Consulting Service, Saving Bank Foundation for International Cooperation. I will say a few words about France and the regional programs. In 1981, the Caisse d'Épargne Saving Bank gave married women access to the Caisse d'Épargne saving accounts without requiring that they seek the permission of their husband. 1881. Even though it was not until 1965 that the financial independence of women was passed into French law. One of the struggles in Europe and France is enabling equal treatment, equal pay for equal work. The following is a French association with a program linked to the commitments made by saving banks in France. Its name is Finance and Pedagogy. And it is a training organization created by the Caisse d'Épargne in 1957. It operates across France, implementing financial education programs. One such program involves learning about the stock market, intended for everyone, with added support for vulnerable people. Another saving banks program to help increase the number of women entrepreneurs, means 40%, is Entrepreneuriat Féminin, women entrepreneurs. Through the Entrepreneuriat Féminin Regional Action Funds, seen in 2014 and renewed for the period 2021-2023, we have made commitments alongside the state with the minister responsible for gender equality, diversity, and equal opportunity. It is important to support this mechanism. Equal opportunities means equal treatment. Speeding up the development of women entrepreneurship by the establishing partnerships at national and regional level with players involved in business creation, participating in the Entrepreneur Féminin Regional Action Funds for the 2021-2023 period, raising awareness, training and leading bank advisors on how best to receive female entrepreneurs, and paying particular attention to communication with a view to promoting women entrepreneurships. I could talk about many more programs that have great ambitions, but we should now get on to our discussions, which I'm sure will open up new avenues for developing the financial education of women. Bear in mind one fundamental value: equality between men and women. Let's all continue to act for the education of women, equality for women, equal treatment, and let's all meet again at the United Nations, at UNESCO, to make our voices heard. My heartfelt thanks to you all again, and thank you for your attention.
Underlining there just how important this issue is, some of the topics, some of the challenges that we need to address if we are to make progress, and also underlining why ESBG is organising today's event. You said financial education is in our DNA. You gave some example of projects. There will be more. You will hear about lots more initiatives in this area. What can we learn from each other as we seek to rise to Dominique's challenge to act together and build on the work that is being done now? Our next speaker, who was on the programme, Verena Ross from the European Securities and Markets Authority, sends her apologies. Unfortunately, due to family circumstances, she had to cancel at the last minute. So we are going to move straight on to our first panel. We're going to have two panels. First, we're going to talk about closing the gender gap through financial education. How big is that gap? What are the challenges? What are the reasons for it? And how do we address it? And then in our second panel, we're going to have a particular focus on some of the risks. At a time, we all know, no one in this room needs reminding how challenging the current situation is for families right across Europe as we face the cost of living crisis, the energy crisis, the war in Ukraine, the uncertainty, and all of this amidst the post-pandemic recovery. So what do we need to do to make sure that women and girls are armed with the information they need to understand those risks, to assess them, and to make sound financial decisions? So we have a great deal to talk about, and we have two wonderful panels. We're also going to hear after the coffee break from the European Commissioner for Financial Services and Capital Markets Union, Mairead McGuinness. So lots to come. Let us move to our first panel. And I would like to ask our panel, as I introduce you, to join me on stage. Stairs are here. Don't attempt to leap up the front. Something disastrous might happen. Delighted to welcome Anne Cairns, who is Executive Vice Chair at MasterCard. Anne, a very warm welcome. Thanks for being with us. Ellen Bramnes Arvidsson, Executive Director at Finance Norway. Morning, Ellen. Lovely to have you here. Gabrielle Semmelrock-Wertzer, President of the Austrian Savings Bank Association. Very good morning to you. And Magdalena Bria, Chief Executive Officer at Pro Futuro. A very warm welcome. She'll tell you what Pro Futuro is in a little while. So this is going to be a totally interactive discussion. I've asked our panels not to make opening remarks or statements. I've got some questions for them, and I hope that all of you, and remember, if you want to use Slido to ask your questions, scan that QR code, page 10 of the conference pack, and you can put your question in there. It's very helpful to me, by the way, if you say who you are and the organization you represent. You don't have to, you can ask anonymously, but I find it helps to know where you're coming from. But before we do that, and as I say, we're going to use old-fashioned non-technology for this. I just wanted to ask those of you in the room, in terms of the key reasons, what do you see as the key reasons for the gender gap in financial know-how? And I'm going to give you two options, and then I'll ask you to raise your hand, or three options. To which you think is the real, obviously there are multiple factors, but is the primary problem a lack of knowledge of financial issues, do you think? Or is it a lack of confidence among women and girls in using that knowledge? Or is it something else entirely? So by a very non-scientific show of hands in the room, who thinks it is actually a fundamental lack of knowledge that is the real issue we have to tackle? Okay, a few of you, not that many. Who thinks it's more that women lack the confidence to use the knowledge they have? Okay, very interesting. So for more of you, and who thinks it's something else I haven't mentioned, I'm going to ask you later on, those who say other factors, because I will be coming out Oprah Winfrey style with the mic in the room for you to tell me what those other factors might be. And my second question to you is, if it's a lack of knowledge, those who said it's a lack of knowledge, do you think it's a failure to reach enough women and girls with generic financial education programs? So we heard earlier about some of the work being done by all sorts of financial institutions, but particularly by savings and retail banks. Is it a lack of reaching enough people with those generic programs, or is it the need for more that are targeted specifically at women and children? I.e., is there a difference? Is there a difference in the way we need to approach this issue? If we're approaching men or approaching women, or is it something else? Who thinks it is a failure basically to get out, to reach them with the generic type financial education programs? Who thinks we need to be more targeted, that we need more programs that are targeted specifically? Or do you think it's something else entirely? Guessing from the room. We got to, yeah, something else. I think on this question, there is more agnosticism. Let us put it that way. I will ask all of you what you believe. But let me start just by getting a sense from you. And Dominique gave us some figures. But Anne, perhaps I could ask you first, how big is this problem? How wide do you believe this gender gap is? And Dominique gave us some very important reasons why we need to address it. What for you is at the heart of the reasons why you as an organisation, we'll come later to the sort of things you're doing, but why you put such emphasis on this issue?
Well, thanks very much, Jackie. I mean, on a global basis, if we look at women owning bank accounts versus men, the gap's about 9%. I'm talking all over the world here on average. The sad news, Jackie, the very sad news is that it went up to 27% when you looked at the digital banks and the fintech sector. So it got worse, not better, in the digital age. And that is a pretty astounding gap. And, you know, it's very important today because much of the world's wealth is starting to move into the hands of women. I think we're heading towards $216 trillion on a global basis. And if we are not actually mobilizing that in the way that we should for the world's global economy, that's a serious impact on all of our lives, not just for women, for men, and everyone around the world. So we need to pay attention to this. Often people think about financial inclusion and they think about it at sort of one end of the spectrum. And as you know, the global vice chair of MasterCard, I can say we have done that. We pledged to bring the next billion people into the financial system, and we brought in 625 million so far, and we'll hit that billion before 2025. I'm confident. And there's a much higher proportion of women excluded than men for all sorts of reasons, such as digital exclusion. Women on average are 20% less likely to have a smartphone on a global basis. And so not only are they financially excluded, they're digitally excluded. And that means that information will
come back to that question of digital exclusion and how do we combat it later, because of course the digital revolution has, in some senses, has huge benefits for consumers, male and female, but now this particular problem. But let's come back on that later, coming back to that bigger picture of where we are. Ellen, for you, we heard some numbers there from Anne. How serious a problem do you think this is, and why for you? Because I was very struck there, it's not just about equal rights. It's also about our economy and mobilizing money. Why for you is it so important that we're having this discussion today?
Because it's about life and well-being, being able to live good lives. I haven't got the global numbers, you got them, but I'm privileged and come from one of the richest countries in this world. And looking at our local numbers, struck by the gap. The gap when it comes to financial literacy as such. In this very highly educated country, we still have only 86% of men finding that they are financial literate, but only 53% of women.
By their own calculation.
By their own calculation. So that is, and it also comes to your second question, of course. But it is a substantial gap, and it's notable, isn't it? Because these are people who are have come through a mostly 12-year-long education, and still they feel this way. So it's also a quite financially advanced population. They're digitalized all the way. Financial services are only digitalized, which is a problem in itself, but still. And people use the different tools in the financial toolbox actively, but still they perceive that they aren't proficient enough. Which comes to your third point then, because it's probably felt as abstract, it's probably felt as difficult, so they lack confidence in using it. I was very happy you posed that question, because that's really my sort of take on this. That why is it when you have education, you have wealth, you have possibilities, you have the toolbox, still don't feel confident?
Come back on that, I hope, in our discussion. Gabriella, continue to build the picture for us in terms of how serious a problem you think this is, and for you, why it's so important that we're having this conversation today.
I think the problem is really serious because in the long run, if whatever, and I found it very interesting what you were saying, Ellen, what we see that in principle in the financial education, the gap is not as big as you said, but it becomes bigger then as we move forward, because people obviously, or women, lose confidence. They are not targeted correctly. So that means that when we go on financial literacy, which is poor overall in the population, unfortunately, there the gap becomes much bigger than it was at the beginning when we talked about education, because in our systems, the financial education is as good or as bad as it is, but that's actually for both genders. But then it means that throughout their lives, financial health becomes more and more a problem for women, and that's a bigger problem for women than it obviously is for men. And this means as they tend to live a little longer, they earn less, they have children, probably their time in their working environments is shorter. So all these issues, if they are not financially fit, it means that their financial health is much poorer and their financial well-being also in old age. And so this is something that's very important, because sort of we have an aging population. It's not just that more wealth is coming to females, but also that in the aging population we will have a big difference, because a bigger difference between the genders, and this should not be. And just let me add one thing. I find it very interesting and comforting for a savings banker, as I am, that we see that the digital world creates more problems. And what we say is that, especially in banking, we still believe in the interaction and in the offline services. You have to have both, and obviously this makes sense.
Thank you very much indeed. And your point about that lifelong approach, and going back to what Dominique said about the Sustainable Development Goals, and Goal 4 isn't just about equal access to education, it is the promotion of that lifelong learning. So want to talk later about the roles that schools, the education system plays in all of this, but also hear about what you're all doing and some of the initiatives to promote that lifelong learning, to tackle this issue of financial health throughout your life. But let us complete the picture. Magdalena, you'll tell us later a bit more about Pro Futuro. But in terms of how you perceive the scale of the challenge, and indeed maybe actually say 2 words about what Pro Futuro is and why it was launched.
Okay, thank you very much, Jackie. Pro Futuro is a digital education program focused on the most vulnerable population in the world. It's working right now in 40 countries, and it's not working in the developed world, but outside Europe, mainly in Latin America, Africa, and Asia. We promote digital education it was founded in 2016 by Fundación Telefónica and Fundación Bancaria La Caixa. And the aim is to provide digital education to decrease the educational gap in the world for the most vulnerable using digital education. In this, because we think that digital education provides equal opportunities to all, and the reducing the digital gap even improves or avoids this increasing empathy.
And in terms of the issues you're addressing, to what extent do you perceive through your work this gender gap?
Okay, so I think it all comes to education. And as UNESCO was already saying, in 2021, almost 244 million children were out of school. 50% of that number are girls. So it means it looks more or less fair. But in fact, only 35% of those girls finalize their secondary education. So I think this is one part of the problem.
Thank you very much. Lots to come back to. I think most of you answered. Gabrielle was saying women lose confidence. So for you, I think your answer to my polling question to the audience was more lack of confidence. Ellen, you also, I think, pointed in the same direction, that you feel it's not so much the lack of knowledge, but lack of belief. And there is a study that was done that said, if you give women the option, are you financially knowledgeable or are you not, or do you not know? Ask them any question relating to financial services. They will tend to say don't know. But if you take don't know out of the options, so they have to say, yes, I know this, or no, I don't, they will know it. They'll get the answer right. So which suggests, and this study concludes, they say it's 1/3 confidence, 2/3 lack of knowledge. And how did you answer that question? Was it for you, was it more a lack of knowledge or a lack of confidence? And because
I think it's both. I mean, I think it's a complex area, and I think if you think about Ellen's country and my country, Britain, there's a lot of knowledge out there, and in many countries around the world, women are running the household budgets. MasterCard reaches 3 billion people on the planet, and 85% of the day-to-day buying decisions are made by women. 85%. So I would say women know how to handle money. Yeah. They do it every day. They feed their families. I think that it's more a question of when you ask them something about, are you financially competent? Then they start thinking to themselves, my goodness, do I understand the world economy? I mean, what question are you actually asking me? And so, I think they're much more competent and knowledgeable than they think they are. It's just a natural tendency to be, rather, underestimating it.
Am I right interpreting you as putting this more down to a lack of confidence? And if I was, what is the key? I mean, this is frankly a broader issue than simply what we know about financial services. Women still, even in Europe, even in equal societies, feeling less confident. Was I right interpreting you as feeling that lack of confidence is probably the key issue here?
Yes,
sorry, to Gabrielle.
Yeah, I would agree. Yes, because I think it fits into the pattern that overall women tend to be less confident in their own competencies. And you see this all the way through when I apply for a job, when I'm talking to a female want to be team leader, and I would say, okay, tomorrow you start the job, go ahead. She says, can I please go home and think about it, because I think I lack 1 or 2 things, and I will do it if you promise to support me. If I if I ask the same question to a young gentleman, maybe not even as well proficient, he would say, yes.
The one lacks confidence they should have, and one is maybe more confident than they should be.
Gabrielle, you told me a great statistic from the bank at.
We are not as good in promoting women, and our sort of in our own company, in our own savings bank. So the managerial we have it's on the board level, it's good because we are 75% women, 3 people, 2 women. But then one level below, it looks awful. Yeah. And when we apply, when we do ads to when we need applicants for team position or managerial positions, in the past we hardly got women. Now we had a little project and we changed the wording of the ads, internal ads. And it was simply that we now focus more on saying, do you want to work to promote a team? Do you want to coach people? Do you want to take responsibilities, work, go with the team? And this stuff. So
they said yes.
And we got out of 13 applicants, we had 7 women and 6 men. And the nice thing is we didn't shy away the men, but we got the women out of their little.
I love this. I love it. I was telling Gabrielle that I was talking to a professor at Berkeley, and she was saying that they never got the women applying for the STEM, the voluntary STEM courses, you know, because it was all sort of horrible titles like, you know, analytical machine learning and rage, and all the women went, I don't want to go to that. And then Berkeley changed the title and said something like creative innovation.
Suddenly there are
Loads of
Can
women.
I ask you, Ellen, you gave those figures, frankly staggering figures, because we're talking, yes, about the developing world, where Magdalena's work is, but you also said, look, in our country, it's a rich country, and you said 86% of men think they're financially literate and 53% of women. So my question is the same to you. Was that 53% of women, people say, I don't have the knowledge and I need it? Or do you think it was again reflecting a lack of confidence?
I don't know.
No.
This was an OECD survey showing these numbers, but there is research looking into the division between knowledge and confidence, and that you need both to sort of actually master your life knowledge, and that research tends to point to the lack of confidence as the main explanatory factor.
Interesting. And Magdalena, by the way, those of you who said other to this question, I want to come out with the microphone in a minute. So if you're willing to tell me what your other was, you will have a chance in just a moment. I wanted to warn you, but Ellen.
Because I think there's an element, there's one more element. I used to work in pensions, which is a complex and rather dull product. It's something you have to pay for now, and you look far into the future, and if you're alive you'll get benefits from it. So it's not the most sexy thing you can use your money on. When we looked into that, how to increase interests in people's interest in pensions, and how to make people actually do the allocation. The word attention became very, very important, and that has to.
In what sense?
Attention and curiosity, because if you lack knowledge and you lack confidence, maybe, and you don't even know that the problem is that.
Right.
You need somehow to get attention to that this is an area of your life that you need to sort of look into and make a stance on, this awakening of curiosity, awakening of attention is one element that is important in this context.
Which brings us to the question that I asked afterwards about, do we need generally to reach more women with these programs, or be more specific, have targeted programs? But we'll come back on that. Magdalena, complete the picture for me in terms of focus there on even in this gender gap in the richer countries, but in the countries you're working in, is it both lack of knowledge, lack of confidence, or is the lack of knowledge issue a much bigger one in those countries? I would imagine it is.
I would say it is, but of course, following what my colleagues are saying here, I suppose that the same thing happens also in the underdeveloped world, a lack of confidence as well. But I think maybe I can tell, or maybe you can ask me later, what are we doing to provide this?
I will do.
Yeah.
I will do. What I'm trying to do at the moment is sort of set the context.
Okay.
What is it that all the initiatives that all of you are working on? What's the problem? What are we trying to get to? And then I'd love to hear more about what you're actually doing. But let me just, if I could just grab off that microphone, as we don't really need them on the stage. We may not in the room. This room is a marvel of high tech and has good miking, but just in case. Just anyone who said, when I asked, is it lack of knowledge or lack of confidence, said other. Would you like to tell me why you said other and what you think the other is? And please introduce yourself. It would be helpful if you could stand up and turn so that the people who are watching us online can see you on camera.
Okay, thank you very much and good morning, everyone. My name is Antonie Koning and I work for CGAP. I actually agree with Anne. It's a very complex picture, so it's not either or for one. But on the other hand, I actually would say that there is a more systematic issue at play here. And some of the panelists alluded to the differences in roles and competences that women feel that they have to have, including the care responsibilities. Someone alluded to the pay gap. And I think it's the systematic differences that we see for men and women that don't only reflect back on the women that believe, as in Norway, that they may be less competent, but also everyone else in the financial system, including the staff working in financial service providers serving women who might be more hesitant, more aware of risks. I don't like to say that women are more risk averse, they're more aware of risks, and they take different approaches to financial decisions that really influence many more parts of their lives than men may do. And of course, I'm generalizing here terribly, but I do think it's a much more systematic problem that we have that creates this inequality between men and women. That's more than a lack of knowledge or a lack of confidence.
We should have added to that question, lack of knowledge,
Norms.
lack of confidence, or lack of a sense of need to know, not top of the priority list for all those reasons you talked about. Anyone else who said other want to tell us why, and then I'll come over to you.
Thank you very much. My name is Florian Wimber. I'm representing Insurance Ireland over here. Very much also agree to what you just said. I think it's the awareness. It's not the lack of confidence with it. It's the awareness that the level of knowledge doesn't speak for the problem addressed. And this, we as financial services industry have a quite interesting challenge ahead of us. Is that do our products speak to the needs, or does actually the knowledge which is there among women and the higher awareness for risk, as you just said, lead to the situation that there is awareness that I can't solve my problem properly? And for the generalization piece, I also add, do we address things like discontinuity of work life, changes in income, potential needs to cross-finance or subsidize other needs in our upcoming work? So from our perspective, and we try to address it as well as an organization, do we actually speak or address the problems in our product or in the solution of which people are aware when assessing their finance?
Thank you. I'm going to take one more panel and then I will come back to you. But this is fascinating in terms of building our picture of what it is we're trying to address. And that question, do our products speak to those needs, links to this question of should we have targeted product-specific programs for women or get much more of them generally? But please.
Thank you very much. My name is Bettina Fuhrmann. I'm from Vienna University of Economics and Business. And first, I said it was confidence.
Yeah.
And I also think that confidence is key, but there are a lot of factors playing a role for confidence. For example, what we found in interview studies is that in many partnerships, there's a kind of division of labor, meaning that women concentrate on the daily business, on the daily purchases, for example, as somebody said, 85% of buying decisions. And they trust that their partners will do the big financial decisions, will make the big financial decisions. And as long as the partnership works fine, it's also a matter of efficiency that they have that kind of division of labor. But as soon, of course, as the partnership breaks up, then one person is left alone with all the big financial decisions that the person has never made before. And that's also an interesting part, because in the Austrian data, we found that females, well, women that live on their own, they have no significant knowledge gap in comparison to men.
Thank you. We're going to hear from you in our second panel. Love to hear lots more of that data a bit later on. So panel, linking all this together and that question about, do our products meet needs? Do you feel, and in your approaches, before we'll come in a moment to what you're actually doing, but do you think the answer is, some of you have very specific, very targeted programs aimed at women and at young girls? Is that the answer, or is it also about this generic access to generic? Are we reaching them, or are they saying, somebody said earlier, I think it's you, Anne, it's got a terrible title. Now that's in education, but in terms of the sort of packages and programs you're putting together, should we be generalizing here? Gabrielle, maybe I could come to you first this time. Should we be generalized, basically get to more of them, make it appealing, make them think they should and want to know? Or do we need to be much more tailored in the sort of programs we're offering?
That's a tough question, actually. It's a tricky thing, because if we just change the wording and generalize and not look deeper into the needs, which are a bit different, yeah, because still the way the work-life balance, the work span itself, etc. If we just change the wording and sell products that are not really tailored maybe to the needs specifically of women. I think and that's why I think where we need to talk more. So I think the advice, if you talk about these lifelong, it's a bit like selling pensions. It's not always so funny and fancy, but I think financial services is the industry has to come back to the original idea, sitting down with people, talking about their needs and their ideas about their life and where they want to get to, and then come up with the decisions or the products. And this, then, if you start with this, you can also be more specific and targeted towards women or female needs and male needs. Yeah, I think, and that's not rocket science, honestly. We simply have to get it into our own curriculum, yeah, to do this. But I think,
Magdalena, do you in the Futuro programs, do you differentiate? Do you have more gender specific, targeted more at women and girls, or more at the general population? Is this a distinction that you make?
No, not really. No, not really, because we work with such vulnerable population that they are all vulnerable.
Yeah.
The girls are even more vulnerable, but in fact, we work for all of them.
Thank you very much. Ellen and Anne, a thought on this question of the generic versus the tailored. Ellen first, and then Anne.
Well, yes, please, both. Because there's such a diversity in what you need in life through what you choose for your life. But we do have a general education starting out, and financial literacy up to a certain level should be a generic part of that, so that you have a platform to build on when you enter into making the choices that are more complex, getting into life situations that are more complex. So it's like education. You need to have something to build on, and then you build stone by stone, following the direction you go into. And I think we as an industry need to cater to that, which is very much in line with the traditional role of house.
Anne?
Well, I'm an absolute advocate of targeting. I'm not only on the vice chair of MasterCard, but I'm also the chair of Financial Alliance for Women, which is a peer-to-peer learning network. Involves many banks around the world, some big banks like Westpac, HSBC, I mean, we're literally on every continent in the world, and it's really focused against helping banks understand the she economy. How do you target your products to women entrepreneurs, to women savers, to women who need pensions, to people who've just been divorced? Very interesting. Someone from Westpac came and talked to the Financial Alliance and said that in Australia, like most places in the world, I think there was like 35% of the population getting divorced. And all of a sudden, worrying about splitting their mortgage, splitting their credit cards, splitting their bank accounts, and so on. And Westpac actually set up a customer service desk that actually ran their customers and said, don't worry about this, we're going to help you do all of these things. Imagine how good that must be for men and women, but particularly women that, you know, as we heard one of the audience say, you know, might not have been making the big financial decisions, may have been making the day-to-day buying decisions and thinking about things like their house and their pension and all of these long-term, you know, potentially illiquid assets, having help with that.
Okay, let us come to what needs to be done. And I want to start with schools, and then I want to come back to what all of you are doing and talk more about what you are. But in terms of the curriculum, and I think you pointed to it earlier when you said, well, we could change the titles of some of these STEM courses to make them sound a little more appealing to anyone, frankly. I would defy most men to be attracted by some of the titles examples you were giving. But what is the key at the school stage, do you think, to really making sure that this gets embedded? I take your point, Gabrielle, about later, and that's where you all come in more, the lifelong learning, the financial health throughout. But in terms of what schools need to do, are they doing enough? Ellen, do you think that for most women and for most girls at school, is it a question of making more of them do STEM, or is it a question of more what I would call civic education? So you don't necessarily have to be doing a STEM subject, but financial education should be part of your broader education, even if you decide you want to study history and languages. What do schools need to do to get this right, do you think?
I think that it needs to be sort of basic economics needs to be part of the school curriculum. And to me, it was a bit surprising, but we actually got financial education into the Norwegian school curriculum as late as 2018 or 19, which is, you know, quite late. We had been working for that, towards that for quite many years. This late introduction means that we haven't got the means to evaluate it yet, but we will. This builds on a long tradition of financial institutions and savings banks being active in schools when they have been allowed to enter, in order to coach and be near people's economic lives. And that is, I think, one of the key issues in this fundamental school, I mean, primary, secondary school education, that it has to be relevant for the children. It has to be relevant to what they are experiencing in their lives at this moment. Because if it's not, it becomes too abstract, and abstract is difficult for children. So you need to be able to hook into it and make concrete examples of how it actually functions in order to get it into their sort of DNA.
And you raise an interesting question about then the role, I should say, of financial institutions, that debate that is answered differently in different European countries about the degree to which industry, any industry, is allowed through the school door or not. Magdalena, in Pro Futura, you work through schools, you work alongside them, because you're looking at vulnerable groups, both adult and young vulnerable groups. To what degree is your work really through the schools and trying to get them to change the way they work?
Yeah, exactly. So we work in schools, we provide digital curriculum, digital resources, we provide platforms, we provide equipment. and we provide teachers with the training to put all that in place. So some years ago, we decided to introduce digital financial education into our content, into our educational offer. And we work with small children, primary schools from 6 to 12-year-olds. And as you said, which I think is very interesting, we made an assessment of different financial education programs. And we decided to work in a cross-curriculum approach using financial education combined with science, language, maths, whatever they need to do in their day-to-day life. And what we did around this cross-curricular approach was to focus our teaching and the program on the savings, how to do savings, what's the difference between an individual savings account or a group savings account, decisions about savings, what is a reasonable saving, discussions about recycling, reusing, rethinking, all that, the R's, savings, or all this teaching around expending, how to expend, what is a reasonable and a responsible spending, what to take into account when spending decisions were to be managed, what to teach about a budget or a financial decision. So we have tried to introduce all these things in their cross-curriculum approach, so that.
Thank you. And from your perspective, and in terms of, I mean, that I was slightly staggered to hear what Ellen said about, it was 2018, I think she said, when these basic economy classes, as it were, fundamental education in this area was introduced. I don't know what it's like in other EU countries, or indeed the country you and I know best, the UK. How important is it? Do schools need to change the way they approach this?
Oh, completely. And by the way, I mean, I'm a great advocate of STEM subjects. I think 1 in 20 girls choose STEM careers versus 1 in 5 boys. And as we move into the internet, into Web3, into 5G, into artificial intelligence, deeper and deeper, with that kind of disparity, we're going to have a future world designed by men. And we're already living in a world designed by men. So, it's really bad. Stop. So as far as a tech company, and we want to reach the problem in tech, and we said, where are they? Why are they not applying for the jobs? So we actually went out and said, actually, many girls are giving up these subjects as a young teenager, and we need to get them to understand it's fun and it's glamorous and it's exciting and it's creative to be in tech. So we actually put a program together called Girls for Tech, where we've now reached 2 million girls around the world and across 56 countries. And we've got 5 million in mind for the next couple of years. And we actually just go out and bring in girls, roughly about 10 to 12, about that age, and show them how cool it is to work in the tech industry, with a hope that they won't drop their STEM subjects and may take them up later in life.
And are you being let into schools to do this, or do you do it outside of the whole formal education
we're
structure?
definitely being let in. We sign up big contracts with educational companies around the world to actually distribute. Just a similar way we do MasterCard with models signing up with banks. And we have to do that to get the distribution. I mean, there's only 30,000 people in our company. We're in 200 countries. So, we need to work through partners. But I, back to our country, I actually am involved in Speakers for Schools, where the schools invite you in and, as a senior C-suite executive and somebody who was a research scientist, I say, look at my career. This has been a lot of fun. And try and encourage girls, particularly boys and girls, but particularly girls, to say, go for this.
Well, and Gabriella, you mentioned earlier the lack of women at senior levels, and that lack of role models, that lack of people like you who can say, look, I do it, I love it, It isn't dull, it is dry, it's fun, it's creative, and it's helping to change the world. How important for you is that? And in terms of what schools need to do, are you working with schools? What's the situation in Austria?
We have been banned actually as
You're
recent
banned.
6 years ago, where the savings bank, as you mentioned, in Austria, it was a tradition that the cooperative banks and the savings banks did have special school programs. And there's this little funny figure, the Sparefroh. If you ask anybody in my generation, he very well remembers a little gimmick thingy that was created to get young children what is money and to see a little fun in it. It has been now revived and we still promote it, but we are not allowed in schools anymore. So what we did is that we did put pressure, for example, on the politicians in Austria. So as recently, I think as last year or so, in Austria, it has been included in the curriculum that there has to be financial education.
Last year?
Yeah, I think last year, if even by its very reason.
I didn't know that you were banned from schools.
No,
What's the
it's not-
thinking behind that?
Because we can influence, we are bad people and we influence children.
It's not, it's quite a lot of countries where that happens. That's why I asked the question about, because I know there are some countries where there's a real partnership. And not just in this area, more generally, real partnerships between companies and schools, and other countries where that is considered absolutely unacceptable.
No go. Wow. No go. So what we did actually then put pressure on the politicians, and they also included now that there is a digital education for children between 10 and 14, which I think is a bit late. So I think that the school system, and getting back to that, has a lot to do. There has a lot to be down there. And this is why overall financial literacy, I mean, if 60% of men say they have no clue or they don't think they're literate, that's awful anyways. And then this gap. So I think where we can go in, and that a lot of banks, and Dominique mentioned it, that we have the Financial Life Park that's founded by the savings banks, where we offer courses, digital courses, also just digital, for young people, and get them to know the financial system better in an interesting, funny, exciting, not boring way. So
Thank you very much. And I want to come back to this question of the digital and digital exclusion, all of that. By the way, don't forget, whether you're in the room, and I should have mentioned earlier, actually, the QR code for asking questions on Slido, in case you prefer not to put your hand up, is on the back of your lanyard. Or if you're online, please do send your questions, or indeed comments. There's a lot of expertise and experience in this room and online watching us. So please, if you have anything to contribute to the debate, do join in. But I just want to turn, so we've talked about the role of schools in all of this, and now I would like to hear more about what you are doing. And Magdalena, tell us a little bit more about how Pro Futura works. You've already indicated, and we'll come back to the digital exclusion challenge later, but in broad terms, what your approach is and how effective it is being. I mean, how are you measuring and monitoring the result, the impact?
Yeah, because indeed we are measuring the impact of this digital education in schools. So our approach is a general cross-curricular approach in financial education and in any other education. What we want is that the digital divide is not an additional divide for all this vulnerable population, and we want to reduce the education gap in the world. So we provide assistance, training, long-term training to teachers, so that they can, and we measure that in schools, so that they can use all these tools, platforms, digital resources, and use them in a different, innovative, and using technology approach. So we think that the innovation is possible using technology, and we teach those teachers use technology in their day-to-day life in schools. And we have proven that, in fact, many things have changed. First of all, the engagement of children increases quite a lot. So the dropout of school decreases in the environments where we work, and they incorporate all these digital skills. So we have proof that digital inclusion is possible when you perform these training programs with teachers in schools.
Thank you. Ellen, I know you're doing, I believe you have particularly one project, for example, with with refugee women in Norway, is that right? Are you working with NGOs? Who do you work with on these initiatives, and what are you doing?
Oh, we work with a number of different instances. We work with authorities in developing materials. When we didn't get into schools, one of the sort of vehicles we chose was to work with authorities so that they could get into schools with materials.
Yeah, use them as your conduit, yes.
But I'm sorry, I don't.
Maybe I've been misinformed. I thought there was a specific, but what sort of projects have you launched? Give us a sense of what you're doing at the moment and what more you think could be done. No, more broadly, more broadly.
Thank you. I'd love to, because going back to this attention thing, we try to sort of catch people at the moments in life where they need information and they don't really always know that they do. So we have this program that enables people that are nearly coming of age to learn what they need to know as grown-ups. And that's not only economy. I mean, it's all the things surrounding it. You're now allowed to enter into contracts. You're now allowed to take on responsibilities that you may need to carry on for a long while, and so on and so forth. And we've developed something we called an economy license, a parallel to a driver's license. What you need to know to drive your economy. And we've combined that with a targeted information campaign to young people. In several countries you have this, but I don't know if it's so excessive as in Norway. The 18-year-olds celebrating their baccalaureate, which is a extremely expensive adventure for most of them. And we've targeted information saying that now you're choosing to spend all this money on this party. Have you thought it through? What could you do with this money if you weren't doing this? But also, since this celebration is quite a complicated affair, they are entering into agreements. They are taking on mutual obligations with friends. It's quite a learning experience that they can translate into what they need to know further on in life. So we try to help them take home that experience in a way.
Very practical, very concrete, targeting one specific thing and using that as a way to get people thinking about these issues.
Yeah, and then you know, as you go further on in life, we have more. But if we want to stay with schools, that's
no, I don't want to stay with schools. I want to really broaden out now, because it's Gabrielle's point from earlier about this isn't just about what you know when you leave school. It's about your financial health throughout your life.
What has been very visible in Norway is a campaign that we haven't been doing, but one of our biggest members have been doing, as a result of identifying that Norwegian women own 137 billion less when it comes to securities, which means that even if salaries were equal for men and women in Norway, men would still earn on a yearly basis 53 billion more than women. Combine that with the power it entails. So they launched a campaign they call She's Investing, hashtag She's Investing. And they've created a lot of venues, a lot of communication through social media, through television, through debates. And they've managed to somehow make this investing thing cool for younger women, which is, it's talked about and it's visible and it's cool.
And talking about cool, we have a question from our audience saying, what role could mentorships, particularly between women, play in increasing the confidence of young women? So can mentoring help? And also, can it make it more cool? Because you're talking to women who do it, who you think are cool, and you want to be like them. And just a little bit more, you talked about the Girls in Tech program. Give us a sense of some of the other things that you're working on. And to this point about, how do we really excite people? Is mentoring part of it? Picking up on that question from our audience.
Well, mentoring is a huge part of it. By the way, I'm also global chair of the 30% Club, which is all over the world as well. And that is the organization that's focused on getting at least 30% of women at the top of companies and in boardrooms. It's not that we think 30% is the target. We think it's the tipping point towards parity. We got to 30% in the UK without mandates 2 years ago, and we accelerated to 40% in our top companies in 2 years. So just by saying we're going to set these, goals for ourselves. So on 30% Club has one of the biggest mentoring schemes in the world. And the thing that's wonderful about it is thousands of companies involved in this, and people from one company mentor people from another company. And it's focused against women coming up through the ranks and getting mentorship from very senior people, men and women, in other companies. I mean, I mentor somebody in KPMG in Atlanta. I think it's a really important part of development. In terms of MasterCard, we cover the whole gamut, but one of the good things is we invest in female entrepreneurs. And a bit like our consumer targets, we said, let's bring the next 25 million SME companies into the financial system. But instead of just saying, let the chips fall where they may, we don't care how many men-led and how many women-led companies. We said, let's make it 50-50. Let's level the playing field. Let's go for 25 million companies led by women by 2025. We're already at 22 million because all of the people involved in this in our company went, we're going for it, and sort of went out around the world and found all of these companies led by women that they could work with. So that's one end of the spectrum. At the other end of the spectrum, we're working with a Silicon Valley company called Astia that invests in female entrepreneurs. Not enough capital is going to women who need VC investing. So MasterCard has come in and, put the first 10 million into their latest fund. So there's things like this that we're doing in all sorts of different parts of the world. And it's a lot of fun. And we're working with some great organizations, from Grameen to CARE in Pakistan to Pro-Muta to
And that partnering, finding the people to work with, a really essential part of this whole process. Gabrielle, give us more of a sense of the sort of things you're working on, some more examples of things.
I feel a bit intimidated now.
You haven't got 25 million of them.
So that's probably a slight difference.
But I mean, Gabrielle, just seriously for a moment though, the point that Dominique made right at the beginning about why savings and retail banks are so important in this area, why it's part of your DNA, because of that link to the local community. So we're talking there on the big global scale, and Pro Futura.
I can even broaden it a bit because we do the same in Austria and probably also in Germany. So it's a savings bank idea, which actually is a nice idea because the founding idea of the savings banks was to wherever a savings bank is founded, and it was about 200 years ago, more or less in Europe, the idea is that the population in this region should be healthier. It's actually what Grameen is doing. It's this microfinance idea that access to a financial system empowers people and fosters wealth. And that's what we in a way do. I think what we focus on, and if I talk about the financial life pact that we started, we see now that also young adults are coming and need this financial literacy, this easier access to what is finance, to not be in awe because we have to take a decision, investment decision. And probably there's also a big difference because sort of the central part of Europe and Austria especially, we do not have an investment culture. So we are a savings, maybe also because of the savings banks culture. And if I talk to a lot of people, and they're especially women, because they're more aware of risk, as has been rightly said, then and ultimately they would tend to say, oh, I leave my money on my savings account. And now in the past years, this definitely the wrong decision to take. So I think what we try to do is with all those programs that go through Austria, we have a bus that transports this financial literacy. More centers are being opened to reach out to other audiences apart from schools in order to bring them simply in touch with the financial system. And then there is a woman hub in Earth Day we talked about. So there is a lot of initiatives, pretty much the same. But one thing I also wanted to admit, mentoring is a very good idea. Leading by example in that respect, that you get more female leaders up, is not a good example. I've been on the board of Kärntner Sparkasse now for 12 years. I thought I'm a good example, but nobody followed really. So you have to put much more.
But yeah. But interesting, that sort of also very deliberate, I mean, almost a quota system that you were talking about for the target, 25%, not, set some numbers on what you're trying to achieve. Any questions or comments from the room? Let me come out, and if I can just climb past you. Thank you very much. Please introduce yourself.
Yes,
Thanks.
hello, my name is Margareta Przydła. I am representing Czyczyński Family Foundation. It's a foundation from Poland, and we are producing education projects for children, including financial education. And actually, we have an education project for children from 5 to 10, which is called ABC of Economics. I have it even with me here today. So what I just wanted to say 3 things, that we believe that financial education indeed should be obligatory. It should be part of curriculum at schools from a very early age, and it should be obligatory because then we have equal opportunities, equal access to education in rural areas or big cities. I would also agree that it should be relevant. This is why our project is really based on daily situations that children are experiencing and living. So we respond to questions: where does the money come from? What is the price? What is an advertisement? What does it mean to be rich or poor? Or what is the volunteering? So really things that children are experiencing each day. And those programs that either companies or authorities or foundations like us, we are developing, should be user-friendly. Teachers are very busy people, so they need to have programs that are complex, ready to use. And this is why our program, there is a book, but there are also lesson scenarios, working cards for children, and online training for teachers, because very often teachers say, I'm not an economic, I don't have knowledge. So we really need to provide.
Fascinating. Thank you very much for sharing that while I'm here. Any others? Anybody want to join in? I want to come back on the issue of digital exclusion, because I think it was Anne said at the beginning, it's got worse. And obviously, Magdalena, this is a huge issue in the area that you're working in and trying to work with those countries across the world. What can we do? Because the digital revolution is bringing us huge benefits. We'll talk a little bit more in our next panel about some of the risks that go with it and how do you educate people in terms of those risks and to be aware of them and so on. But more broadly now, in terms of why is it getting worse, and what do you do, Magdalena, to overcome this in the work that you're doing? And then to all of your thought on how we harness the benefits of the digital revolution without this downside.
Yeah, because the digital inclusion together or digital exclusion together with poverty means an additional divide in the world. So we must invest in digital programs. We must invest in teacher programs, teaching teachers how to do digital. And we must ask the world to invest in equipment, in connectivity, and not to forget about that, because the digital divide can even get worse. No? The digital divide is an additional divide that will make the most vulnerable people even more vulnerable than before.
Absolutely.
Yeah.
So we have, the advantage of having apps that help us. There are budgeting apps, there are all sorts of things. There is social media. So all those positives, but also how do we avoid exclusion? Anne, you raised this point at the beginning. You said it's got worse, not better.
Yeah, it's certainly got worse in the fintech era because products are again being designed for men. I know I actually spoke to the head of a big successful fintech in Europe and said, what's your percentage of women? And he said about 20%. And he said, but it's all right, but our products are aimed at 55-year-old guys, the ones with money. Oh. Well, that's fine then. But the thing, I think the thing about this is we have to recognize that in today's world, women particularly are 50% offline. I think you mentioned about this, Gabrielle. So we have to be very thoughtful about how we merge the online and offline world to actually prevent, you know, an increase of exclusion. And particularly if you look at the developing world and you try to introduce financial literacy, financial products into that place, then what you see is that women talk to other people in their own community in order to feel confident and comfortable about what they're using in terms of supporting their own family and making their financial decisions. And so anything that you're developing in the digital world, this component of it that will make it a success.
Yeah. Other thoughts on digital exclusion?
I think what you're mentioning, and is exactly correct. But what we see is that a lot of the usage of our digital offering, which we of course have, is much better when people have been talking about this thing in the branches. So when their branch advisor talks about it and introduces our customers, and I guess it's even more important for women for all the reasons we've discussed, then we see that they go home and start to be online and do it digital. And we have to be very careful, because I've heard this already, sort of saying, there's sort of our population, there's our customer wallet, and we have people who are the leftovers, they are not online, and we focus on the others, which is horrible to hear that, because this is not just women, but mainly it's women, but it's elderly, but
Like
all
me.
and me. And so I think, but what we can easily do, and this is true for all the industries, but especially for the financial services industry, is to get them online if we want, or if they want to support this, because they need it not just in their financial life, but overall. So I think this combination of an omni-channel offering and helping people. In the beginning, we said we go for customer focus, digital customers and offline customers. But sort of digital offering should not be done in branches, because that's our Digi offering, but that's wrong. We can introduce the digital offering in our branch system. We get people to feel more comfortable about it, and then they move on.
Thank you very much. We are coming to it, but I just wanted to touch on, and Ellen, I don't know whether you wanted to add anything on this, but you talked earlier about working with authorities and how important that was for you. And we haven't really talked about the role of policymakers in this, whether it be, and we're going to hear after the break from the European Commissioner. What role do you think they should be playing in terms of supporting the sort of initiatives that you're taking?
Actually, when I looked into that question, I thought, well, and then I must get back to you. And I so agree with you, because this is part of how we compose our society. So this is not sort of one policy issue. This is more, what kind of society do you want issue? So I don't really, and it's dangerous to see that, but now that we've have been able to include it in the school curriculum, we feel that we've taken a very important step, and I can't really see, the big political prize next step thing. But I would want to add on this digital debate, because Norway is extremely digitalized. It's everything is digital, and the expectation is that everyone wants it to become more and more digital, and it's easily accessible, and everything works all the time and things like that. But now we've identified that even if you have been digital, you're not necessarily cognitively in a place to continue being digital
as it advances and develops.
Yes. And this is an increasing problem. We have now 600,000 people in a population of 5 million that are not digital.
Yeah.
And they tend to be the older category of people. They tend to be have done all the big life decisions, but they still need to do their everyday stuff. And also some bigger stuff. So we've made a program for inclusion throughout the life, not digital inclusion, but inclusion in the economic system throughout your life in a digitalized world. In there's a pledge that we need to keep some sort of analog services up and running.
Yeah.
Because if not, we exclude, and then we have the sort of problem in the
Which
other
I think
end.
also goes to Gabrielle's point about don't make it something that happens completely
Yeah, but-
separately.
Yeah, but that is a problem, isn't it? Because since banking has gone totally digital, the branches are only there for, the big moments in life. Very short of people, very short of opening hours, and so on and so forth. So you have a dilemma.
But that's a strategic discussion and issue that we have, and we do discuss very emotionally. I'm totally against this. The branches are just for the big things.
Yeah.
The branches should remain the points where people
Human contact with all your
and
customers.
then we try to sort of find the channels that fit them and us, of course, because we want to make money.
As you say, this is
It has to be about
broader strategic
your
discussion.
I think it is.
We are
By the
almost out
way,
of
in
time.
Britain, It's 12 million people who are digitally underserved, 12 million.
So
And
even-
when
yeah.
COVID hit and kids were sent home from school and some kids and others couldn't.
Okay, we are almost out of time and we're going to have a coffee break in a moment, but I want to ask each of you, and I'll just go straight down the line. So I'll start with Gabrielle and I'll finish with Magdalena. Of all the things we've talked about, if we want to build, and we've heard about some of the very interesting work you're doing, the projects you're supporting, and we've heard a lot about the challenges and all the different things. And it's a bit unfair, but I always like to say, okay, when we leave this room, as we go away from here, what do we need to do to build on what's been done? And frankly, to accelerate progress, because you've given some very stark statistics of just how serious this problem is in some countries. For each of you, if you had to identify a priority, and it can be for you as a savings bank, as MasterCard, as Norway Finance, or for ProFutura, or it can be for policymakers, for others. What for you is the key next step to build on what we've done and meet this challenge? Gabrielle first.
First, I think it needs persistency. We have to be persistent and stick to the issue, and to the problem, and really broaden it up to say it has to be a lifelong accompanying theme.
It's a mindset
Mindset theme, and to think about financial inclusion, financial wealth, financial health in a way. And that has to be, and there has to be a persistent focus on including women into that.
Thank you very much. Anne.
Yeah, I think that you just have to be intentional. I mean, you have to, like the book Invisible Women, you have to recognize the world wasn't designed without women involved and without women in mind. And we can't continue to do that. So we have to change, and we have to look at everything we're doing and make sure that the future isn't like the past.
I must confess, I'm amazed that we still have to have these conversations. It staggers me. You're absolutely right, but it staggers me. Personal comment. Ellen, for you, the key priority, key next step.
I so agree with you. Persistence, yes. I'm very attached to this, keeping people curious, and in order to keep people curious and keep women curious, you have to design tools and ways of communication that actually reach women where they are doing the important stuff for them, and you have to be more conscious about the choices you make.
I think also one thing when we talk in the next panel about those educating people about risks at a time like this? Also, how do you reach the hardest to reach? You're doing it all over the world. You're doing it through schools, Magdalena, but how do you reach, for example, refugees? How do you reach migrants, those groups that are very hard in a lifelong learning way outside schools to reach? Be something, panel number 2, I'd like to warn you, I'd love to come back to. But Magdalena, for you, the key next step, the key priority now to build on the fantastic work that you've been doing and really maximize that impact.
Yeah, I think that listening to all these very interesting panelists, I think that with persistence is important, and to work harder with the policymakers to introduce the financial education, including women, and to go on with that, because as in the underdeveloped world that does not exist at all, but as I have learned here, not even in the developed world. So we have to go on in investing, insisting with the policymakers to introduce all these financial education schools.
So as you say, tendency to think we're talking about a developing world problem, but as we're hearing, no, it's very much here now, right in this room, everywhere. You're probably not in this room because this is a room of people who work in this industry or focus on this industry, but nevertheless, that huge awareness of how much there's to be done in Europe as well as globally. We're going to come back on a lot of these issues in our second panel. As I say, really focusing on, in these really difficult, challenging times, where does the focus need to be? How do we raise awareness of risk? And also, do we need to change financial education programs when we're in an era perhaps of not using your savings more wisely and well, but you haven't got any savings? It's about survival. And how does that change, if it does, the nature of financial education programs? All issues we want to come back to. I'm going to take a just under 25-minute coffee break now. For those in the room, coffee and pastries are served outside. For those of you online, grab yourself a coffee, grab yourself a little bite, and please do rejoin me. As I say, for 11 o'clock sharp, we will have the European Commissioner for Financial Services and the Capital Markets Union talking to us. So don't miss that. Come back for 11 o'clock sharp. Will you join me in thanking our panel very much indeed? Thank you.
I can't sit still.
So much. Back to part 2, this conference on my world, my knowledge, my future, a female approach to education. In our first session, we heard just how important this issue is, not just as a matter of equality, fundamental rights of women, but also as a matter for our economy and how important it is to address this issue of financial education. We heard about some of the challenges, how big that gender gap is, strikingly so, in Europe, as well as in developing countries. We talked about some challenges related to digital exclusion, lots of issues. And we began to hear about some initiatives, some projects that are being undertaken by savings and retail banks, by other financial institutions to address those challenges. We're going to build on that later on, focusing really on where we are now and those risks, increased risks and challenges at a time of economic crisis, at a time when people are struggling to make ends meet. And does that mean we need to change our approach to financial education? But first, we didn't talk so much about the role of the policymaker in all of this until now. So I am absolutely delighted. That's what we're going to focus on now, because I'm delighted to welcome the European Commission for Financial Services and the Capital Markets Union, Maureen McGuinness. Thank you so much.
Well, thank you so much for inviting me, and thank you for the applause. It allowed me to get my iPad open, because there are moments when you worry, will you have to put in the code. I'm really interested in what you said, you've been discussing so far, because it chimes really well with me and the work that I do. I think there's an impression that if you work, in financial services, financial stability, capital markets union, it's about structures and institutions and regulation. But I always bring it back to being about people. And if it's not about people, then what are we about? And then people build societies. And I'm very passionate that in my time here in the Commission, in these uncertain times, as you have well alluded to, that I use every opportunity to talk about the links between the financial system and society. And indeed, there's lots of reasons why we need to talk about that more and more when you look at the green transition and all of the issues we face today. Just by way of background, I used to work in journalism, so forgive me for the photograph issue as I told you to take off your lanyards. That's because I have years of experience. And I was recalling that my journalism career began rather in agriculture. And when I would go into a room, I was really one amongst many men. And it was quite striking to me that when I joined the Commission and in this area of financial services, I was very often one among many. I'm glad that this room this morning is more balanced. And I think balance matters. I think balance matters in policy making. It matters in so many different ways, but it's not always there. So we have a road to travel when it goes to the role of women and the number of women who work in the financial system. That may be something that we can talk about later. I do think that, what you're doing today is really important, which is why I'm very happy to join you. I'm always struck by the fact that there are many women in the room who may have a very good idea, but feel challenged about raising their hand and speaking up. And I think we need to make all our environments, particularly in the financial area, comfortable spaces so that those who might have the most important question, like, I don't understand what you've just said, are confident to ask that question. Now, perhaps in the past, I was that person because I was never afraid to ask the obvious question that 90% of people in the room also wanted to ask, but didn't have the confidence to do it. And if I say confidence a lot this morning, I think that's a word you're going to hear a great deal of, because a lot of what we talk about around financial inclusion, women in finance, in my view, rests around the C word, confidence. And as I said earlier, and I drift from my prepared script, it's not that we want men and women to know everything about the minutiae of the financial system, but I want to make sure that in my time here in the Commission, that I allow people to develop the confidence to ask the questions and to ask several questions rather than accept information. And I think we have a much more effective financial system and a better society if we do that. And I think in particular of vulnerable groups in society that need that encouragement and that engagement, and very often don't have the confidence. So I think it's clear, and this audience knows, that women lag behind when it comes to financial services, confidence, behaviour and knowledge. The European Commission ran a Eurobarometer survey on how people in the European Union see their relationship with finance. So there were some interesting results. When we ask people how confident they feel in managing their personal finances, at EU level, the vast majority of respondents answered that they feel very or quite confident. But there were gender differences when it comes to managing personal finances, particularly online. 77% of male respondents feel very or quite confident in managing money online. The figure for women is 68%. People might say that's not a big gap, but it is, and it is a gap, and it's in the wrong direction. So women don't benefit from the same confidence in managing their finances as men do. With World Savings Day coming up, another interesting statistic. Across the EU, nearly half of respondents have a savings account. Women and men are nearly equal. But then figures are a lot lower for investment products like stocks or bonds, with only around a quarter of respondents holding these products. So that's 1 in 4 across Europe. And there is a very significant gap here between men and women. So 1 in 3 men hold an investment product, but only 1 in 5 women. And I don't think this is a surprise. There are many research studies that show women invest less than men do, and those that do invest do it more conservatively. And I don't think this is unrelated, but there is also an issue with financial resilience for women. The 2020 OECD International Survey on Financial Literacy shows that about 1 in 3 adults were worried about paying for normal living expenses. And indeed, that was emphasized by our chair. And that was before the COVID-19 pandemic, with its economic impact on many households, and indeed the current crisis around energy prices and cost of living. The survey suggested that less than 1 in 3 adults in participating countries had a financial cushion of 1 week. So 1 week, that's significant that only 1 in 3 adults had that. And the figures for women are stark, who have a more limited financial resilience in general. Women often work part-time in less well-paid jobs or have more unpaid care responsibilities than their male counterparts. I read that when I was 17, and I'm now not 17, and I'm reading it again, which is extraordinary how slow the process of change is. So that means women have fewer buffers when they're hit with income or expenditure shocks, and have more challenges in building up provision for retirement. So there is a really strong need to help women build up their financial resilience. Behind that lack of financial resilience, there are regrettably low levels of financial literacy in the European Union, and women as a group are lagging behind. Again, if I look to the 2020 OECD survey on financial literacy, which I mentioned, women have made progress elsewhere. They're increasingly well qualified. More women than men are graduating from universities in Europe. And the OECD survey tells us that men and women score about the same in terms of financial behavior and attitudes. So maybe it is about access to the financial system. So historically, women have been sidelined in the household when it comes to decisions about money, even though they might have been the managers, but bigger decisions perhaps not. In the country I know best, the Banking and Payments Federation in Ireland had really some very shocking findings earlier this year, but really important research, and I commend their work in this area. They found that 1 in 5 younger women did not have control over their financial affairs. I stress younger because we would have anticipated a very different result. It would be interesting to see this survey broadened across Europe. If we look then at the underrepresentation in the labour market, in 2021, less than 70% of women were in employment, compared to nearly 80% of men. And the women that are working are more likely, as I said, to work in part-time jobs compared with male counterparts. And we know that these gender disparities, they're bad news. They compound people's difficulties in securing their financial future and their well-being. So there is, if you like, a big set of wide-ranging issues when it comes to women and finance. And that's why, again, this gathering is so important. And we need to take action to address them. So knowing they exist is not enough. We do need to take action. Financial literacy is a really big issue for me. Although I sometimes think that financial literacy can be a barrier, what I would like to is know your money, ask about money, those kind of more simple, granular terms. That's what financial literacy is all about. But of course, it's not a silver bullet. It is part of an overall approach. And the reason I say it's not a silver bullet, the truth is today, even if you're good at being financially aware, if your bills keep mounting and your income doesn't match it, you have problems. And sadly, too many in our society have those difficulties. So at EU level, we've taken comprehensive action on the energy crisis, for example. So we're trying to help to ease the burdens that are there for both businesses and indeed for people. And in my view, financial literacy has to go hand in hand with consumer protection, good advice, and a well-regulated financial system. And indeed, a well-regulated financial system stood the test of the COVID crisis, because our banks were resilient and well capitalized. And I think this is good that was the case. But we do worry about unexpected economic shocks like the current energy crisis and the consequences they have for the individual and their personal financial situation. And yes, governments are supporting vulnerable households, and this is really important. But I think at least if you're financially literate, you're in a strong position to deal with economic shocks when they come, or even be prepared for the day when they arrive. Because people who have knowledge have power, and knowledge means that you're more aware of the need to make decisions supporting financial resilience. So the idea of a little buffer on the side, that you save a little, that you don't blow it all on the day of your paycheck. I know that can be very encouraging to do, just if you need retail therapy. But on the other hand, I think it's much wiser that we talk to people about requiring a buffer for those days when it is needed. And also those who are aware and have knowledge are, less likely to fall victim to fraud. And they're less likely to take unnecessary risks or indeed to take on too much debt. And I think all of those issues are hugely important. Because financial literacy promotes, and this is for me huge, resilient citizens.
That means it supports a more resilient financial system as a whole, and it encourages a more resilient society, because individuals and families and in societies with knowledge, again, have more power to be resilient. We also need to invest in financial education, in my view, specifically targeted at women, because there are different questions to be answered and different supports are needed. I think women do have particular needs around financial literacy, like being more likely to face financial hardship in old age. And women live longer than men. It is the one thing we have at the end of our days to be happy with. But we do want to make sure that the gentlemen are laughing. We do want to make sure that women live good quality lives. And I think for lots of older women, that is not the case. And I think around energy and heat this winter could be difficult for some older members of our society. So I think we need to target our financial literacy on different groups. And, you know, Europe has an important role. The EU really should and is playing an important role in this area, because we know there are differences within and between member states. And I think we can share at EU level best practices. Europe does that really well, where we meet and we exchange. And, you know, the Commission has really stepped up. We've joined up with the OECD. We have a financial competence framework for adults. And this is about those things I'm talking about. What skills do you need? What knowledge, what information, so that you can be more financially literate and really empower yourself. Like I mentioned that women tend to invest less than men do, and they're more conservative. So, for example, if an organization wants to support women when it comes to investment, they can build on that part of the OECD framework on financial literacy for adults. And in that, there's also sections on retirement and long-term planning. And that again can be used to tailor a program or a course that's targeting women and the particular challenges they would face. Special focus also on skills and attitudes around financial resilience. So policies to build up women's financial resilience could build on this framework that's in place, given the fact that women face particular challenges. And this is where the confidence word is underlined. It's so important. It's not just about numbers and facts and figures. It's also about confidence. So work targeting women should also think about helping women to be confident enough to put their knowledge into action. Confident to ask the right, not even the right question, to ask the question. Now, there's good news here because there's a lot of work happening to put a framework in place, including specifically for women. There is a Greek NGO called Women on Top, and this is already involved in financial literacy training programs for women of all ages and backgrounds. And they're using the framework that we've developed with the OECD to update and tailor the work that they're carrying out. So it's really important that what we do at the policy level gets translated into ground level, because the change comes from the bottom up, helped by policy. And I think this is really important. Member states can also use this framework. So for example, Austria, Italy, and Portugal, they've already said that they will incorporate the framework into their national financial literacy strategy. And we hope that other organizations will find ways to use it too. Universities, colleges, the private sector, banks, businesses, fintechs, and indeed it's open to everybody. We know it's being used already by the financial sector. For example, one association is developing a game app to teach users how to manage their personal finances. And given the way the world is going, that's the place for it. I'm teaching myself French on an app. I'm making some progress. It's good news that this initiative, as I said, is already being put into use in all sorts of different ways. It means that we're all pulling in the same direction and working consistently and coherently across Europe and at every level. So I think it will make a big difference in helping us boost financial literacy. And just to say that our ongoing work with the OECD is really important. We're looking at the framework for children and young adults, and that will be in place at the end of 2023. And I think briefly when it comes to children and young adults, I mean, where better to start on knowledge is when people are young. I had the occasion of meeting two young people last night, two young women. And I don't know how the conversation came up about money. They might have been shopping. But one of them said, I know nothing about money. I'm really bad at managing my money. And the other colleague said, that's because they didn't teach us at school. And I thought, coming to this meeting today, I just realized there was wisdom in what those two women were saying, but they were also looking for an opportunity
to get knowledge and to develop. And they were aware of the fact that they didn't have the knowledge and therefore were disadvantaged because of that. So that gave me encouragement indeed in just sharing that story with you. One of the things that we're working on is the Capital Markets Union. And of course, not many people will come up to me in the street and say, well, how is it going, the Capital Markets Union? But actually, we know it's not complete. And we know that if we had a strong Capital Markets Union, we would have much more investment in the sustainable future we outlined. We also would have a way of engaging with citizens, and we call this retail investment. So we will roll out shortly a retail investment strategy where we will put people at the very center of our Capital Markets Union. Because I think there is a hesitancy in Europe to invest because we don't have that tradition, different around member states, but generally we don't have that tradition. But there's an opportunity to encourage investment and ensure that there are protections there as well. So again, if I look at this Eurobarometer survey, I think it is really interesting. If you look at where people get their advice, the biggest source is financial advisors, because nearly half relied on recommendations from bank staff or other advisors. So it's important that advice is reliable and suitable for people's needs. And we hope that the retail investment strategy will help women to become more active investors. We should think about the role of women within our policy work, supporting the European financial system more broadly. And if you look at one example, digital finance. So we have a new digital finance platform to support a very vibrant and growing community of innovative financial firms. It's open to all, and it includes important updates, research, and events. And it provides an opportunity for all innovators, including and maybe even particularly women, to become more visible and literally put themselves on the map. On the European FinTech map, a key feature designed to showcase this FinTech community that I've just referenced, and hopefully that will spark new discoveries and new connections. Policy, both at the national and then at the European level, really has a very important role to play. But I do also insist and applaud industry initiatives. And I think this is where you and your members come in. The work you do to exchange experiences and best practices, the measures you're implementing in your own countries. This is all helping advance our financial institutions towards greater inclusiveness. And I really want to say thank you and fully support the work that you're doing. Because if we get this right, then it could make a really powerful difference. Girls who study mathematics and finance and develop an understanding at a young age. This goes back to my story of the two young people. Young women with the confidence, skills, and support to manage their own finances, not to leave it in the hands of others. Young women who enter the financial sector and who are empowered to achieve and reach the highest levels. Women innovators who develop new services that can serve a wider public. Women of all ages and all backgrounds with the ability to invest their money. And older women who don't have to worry about making ends meet in retirement. So we have to provide women with the chance to work, to lead, to access finance, to access credit, technologies and markets. And we can do that if we work together on women's financial education. So I want to refer back to this event here today and really again to thank you very sincerely for inviting me. It's remarkable that we have an event on financial services where the vast majority of speakers and contributors are women. But should it be remarkable? I mentioned my 17-year-old self. I actually remember that vaguely. So we need to look at this. I hope that today can be a really important step towards a world where the participation of women is not exceptional, but normal, expected, and encouraged. And I really want to thank you for the work you're doing in this area. We all know that change comes slowly, but we all also know that we live in very uncertain times. And, you know, the best way to empower and build people in their skills in all areas, including in finance, is to provide information and, platforms where that can happen. We live in a world that is trying to move away from fossil fuels, which is trying to do good things around biodiversity loss. And, you know, this would not happen without money. So the financial system has a key role to play in all aspects of society. It is not apart from society, it is part of society. Women are more than 50% of that society. And I think their active inclusion in this area would reap benefits that we have yet to see. But I'd also say that their exclusion currently is hugely regrettable and can be fixed. And that's why I'm happy to be here today, to encourage you to fix it, not to find problems and solutions, but find solutions for problems. Thank you.
Thank you. Issue. And I was asking the room, is it a lack of knowledge? Is it a lack of competence? And we came to lack of competence being absolutely central. So very much echoing that call for specific and targeted programs also echoed through. And you also touched on that lack of women at higher levels in financial institutions, something again we talked about. And we also talked about schools. We don't teach basic economics, never mind specifically financial services.
Yeah, we're taught to add, which is a help, but maybe 2 points on women. I mean, I was quite, the member state I know best is 50 years in the European Union. We will mark that on January 1st. We've had one, I'm the second female commissioner from my member state. I'm the first female commissioner in the financial services area, which is quite extraordinary as well. So change comes slowly, but thank you for the work that you've been doing earlier, and I know that the work you're doing later today, because it matters. It matters for not just the individual, it matters for families and for society, and it matters for Europe. And I think that's really, for me, just encompasses the good work that's happening here. So I best leave the stage.
I know you have to go.
Thank you.
I know. Thank you so much. Praise the role that financial institutions are playing. We're really talking today about what more we need to do. And we're going to come back to that crucial question of, in uncertain times, does it change what we need to do? Does it simply underscore the importance of doing it? Lots of questions we will come back to in our second panel. But it's been fantastic to have the Commissioner with us today. Before we come to that second panel, focusing on the risks we face in these uncertain times and what that means, we want to hear about a particular project. And I'm delighted to welcome Veselina Angelo, Program Director on Scale to Save, who's going to tell us a little bit about this partnership you're working on. We talked earlier about working together on these things that you're working on to really address these issues across Africa. Over to you.
Great. Good morning, everyone. It is a true pleasure speaking to you here today. I usually speak to African crowds, so I'm particularly delighted having a European crowd here in front of me, as much as I hope that virtually a lot of our African peers are joining us today. And I must say, I was very astonished about how much that was said in the panel this morning actually resonates with our findings from Africa. So please embark with me onto a journey to the African continent. And I would like to start with a quote from one of our female customers in Uganda. Her name is Annette, and she is a charcoal seller from Central Eastern Uganda. She's saying, "It is because of BRAC, that is the microfinance institution, that my business can run smoothly. I have greatly benefited from the savings training that I got from the branch managers and trainers. And because of that training, I have been able to buy a plot of land and constructed 3 houses on it that I am now renting out. I started with a capital of 300,000 Ugandan shillings, that's about $80. Now my business is worth 3 million Ugandan shillings. I have high hopes that the more I'm able to save, I will continue to develop my business, my standard of living, my children and my family will have a better life." End of quote. So adding value to low-income people's lives with the help of savings is what Scale to Save set out for back in 2016. and financial education helped us along the way. Scale to Save is a partnership initiative between WSBI and the MasterCard Foundation. It helped provide 1.3 million low-income people, about half of them women, in Kenya, in Uganda, in Nigeria, in Morocco, Senegal, and in Cote d'Ivoire, with a basic financial service, mostly savings, but sometimes bundled with microcredit or microinsurance. To give you some context, we're talking about countries with financial exclusion rates of up to 71%. The majority of them women with low mobile phone ownership in very dispersed areas where access to finance through mobile might be the only option within a radius of 5 to 10 kilometers walking distance. And whilst the global gender gap, meaning the share of women that do not have access versus the share of men that do not have access, narrowed for the first time since 2011, it increased for sub-Saharan Africa. One of the reasons attributed to it is the increase in digital financial service offer along the ongoing lack of combined digital and financial education for women. There is obviously no one-size-fits-all for financial education. Women's financial education needs depend on the life stages that women are in, on their level of education, but moreover, on their digital and financial savviness. It also depends on women's age and even on their location and economic needs. The way and format in which financial education is offered also depends on social norms and cultural perceptions of a country or location. I'd now like to ask to explore with me a few examples from the Scale to Save initiative in Africa and how education has shaped the experience of our female customers using financial services. In all our projects, financial literacy and education has been cited as an important factor in driving uptake and usage of financial services. All our partner banks have introduced new product features, but new features can inevitably create new pain points and ways to frustration for customers, not only, but also for women. A malfunctioning phone, network interruptions, glitchy apps, forgotten passwords, unreadable prints, agents being closed, opaque pricing, or terms of service. Exposure to fraud and violation of privacy, even by family members. At the first or second pain point, leaving the account inactive becomes an easy choice for women who have not used a digital service before and who wish to remove any source of complication from their lives, especially when a perfectly adequate alternative is around the corner, such as a local savings group. And there are many savings groups out there where women already use financial services, but not in a formal manner. The bank's job then is not to change the customer by imparting new financial capabilities, but rather to adapt customer education to the customer's reality, and deliver services that are simple and practically relevant. And so this is the $100 million question. How do we best provide education in a practically relevant and simple manner? The traditional classroom style, as we know it here in Europe, might not work in the South. Let me elaborate a bit on what banks in Africa tend to do. Service providers in Africa might not have the luxury of a bank academy or a training center being attached to it. That applies in particular to smaller microfinance institutions, especially those who are not part of a larger NGO group. It also takes time and efforts for bank staff to go out into rural areas. We are dealing with very dispersely living populations. Therefore, some service providers use their field staff that could be recruited from a local NGO for training their customers. This is field staff who owns the trust of rural women. Many times, financial education for customers has to go hand in hand with financial education of staff, especially if a microfinance institution has never offered savings before, and the credit officers are now accepting people's deposits. We at Scale to Save offer change management coaching to make sure that bank staff at all levels of the organization and other service providers along the value chain are sensitized and trained for communicating the benefits of digital savings to their female customers. Sometimes, however, it is more effective for the service provider to engage in partnerships and outsource the financial education part. This is to allow them to cover the many more educational needs that a female customer may have. There are many development organizations active in the South that provide financial education. We heard from Profuturo today. Some even help to provide equipment so that training sessions can become movie nights for the entire community. And that can be combined with financial skill set building, social and entrepreneurial skill set building. An even more cost-effective approach tends to be partnerships with local NGOs and industry associations. For example, our Nigerian partner bank partnered with a farm aggregator called Babangona, who collaborates with farm associations to offer access to training and education, access to credit, to agricultural input, to harvesting, to marketing support. Babangona, the farm aggregator, also runs a Women Economic Development Initiative that then combines financial skill set building with entrepreneurial skill set building. And to quote a customer from our Nigerian partner, who's saying, the main reason I joined Easy Club, which is the platform that the service provider offers to provide financial and non-financial services to farmers. The main reason I joined Easy Club is because of the association. They seem to be sharing a lot of benefits as a group, much more than what I as an individual can achieve. We usually learn together as a team and go to the farm to apply what we learned. And sometimes we get it right, and other times you pick up from what others are doing. So social connections and the human touch point are important elements in African culture for learning. Looking at early education, and we heard it earlier today, university and school partnerships can also be a route to success. A very successful approach used by our Kenyan partner, Kenya Post Office Savings Bank, but also deployed by a number of WSBI members in Asia and Latin America, is school banking, where partnerships with universities and schools allow to present financial education as part of the school curriculum. Running a school bank that is organized by students who are assuming the role of both customer and banker has proven to be very practical for young girls and women to get an understanding of financial matters and personal money management. Then we see digital nudges, so text or voice reminders combined with education. There are many fintechs offering to run interactive SMS or voice coaching, an approach that at the same time allows to collect customer data. But we heard earlier in the morning, what fintechs are doing very often is driven by men. We have seen that nudges and information embedded in the product can be useful tools to encourage women to save and transact, as long as messages are kept simple, have been sent by a trusted source. Highly interactive digital engagement might, however, complicate things. Also, many women might not be reachable as they do own a SIM card, but they do not own a phone. There are many ways for educating women if we can put a closer lens on the educational needs of women, so that educational efforts will show greater impact on them. Scale to Save is a learning initiative that had the privilege of conducting extensive customer research. And I'd now like to share a few examples of what we found about women training needs. And let me start with that. Our customer research has identified 5 important factors that female customers consider when adopting and using, and the importance is on using formal financial services. And these factors include the place, the price, people who offer the service, security of savings, and also obviously product features. How should we now tailor financial education so that it fairly addresses these 5 aspects and help women to make the right financial decision? We tend to think that financial education for new service requires to put a lot of emphasis on product features, but other factors appear to be much more important for women when making financial decisions. Allow me to dive into these factors that help women to make financial decisions. First of all, the place where the service is offered mattered most to 43% of our female customers. Sometimes women have mobility constraints. They cannot leave their business or home as they have to attend kids coming out of school. That makes it difficult for them to engage with traditional financial institutions. On the other hand, lack of experience with digital services prevents women from using the nearby agent or a mobile financial service. It speaks very much for the need to combine financial with digital education more closely, and we've heard it this morning as well. Secondly, price mattered most to 32% of our female customers. This applies to the fee associated with the product and to a lesser extent to the monetary benefits derived from a product. As for product fees, the principle of simplicity applies. It, however, gets complicated the more entities are involved. Banks, mobile network operators, agents, etc. We've seen it happening. The zero fee policy of a bank can be undermined by a fixed fee imposed by the mobile network operator for the same mobile transaction. Even worse, if such fees conflict with the coaching message that comes from the bank, that even a small deposit gets you closer to your goal and is free of charge. In the mind of a skeptical female client, it raises suspicion that the bank was not being honest about the charges. Thirdly, people matter most to 27% of our female customers. The human touch point matters hugely in the South. People refers to those who are involved in all the sales activities of a service. Many times, these are the same people who take care of educating female customers about the service. We've seen that female agents, community leaders, or the female head of a village savings group play an important role in educating. Direct, regular contact fosters a sense of closeness and trust, while providing a means to address and educate about any challenges women encounter in using the service. Fourth, the security of savings mattered to 25% of our female customers. Privacy can be violated when a woman needs her relatives or neighbors to help her to conduct a transaction, and that happens many times. To set up a PIN or even just to view an account balance. With visibility and access to the account, some relatives then make financial demands or even withdraw the woman's savings without her permission. This dependency also invokes a feeling of vulnerability to fraud. Coaching interventions can offer safety tips while reinforcing women's self-confidence and managing their own account. And further linked to the security and privacy of a service, banks could in fact become enablers for overcoming social norm constraints, especially in places where women are not expected or encouraged to have financial independence. What banks can do here is to send positive messages that destigmatize privacy for women in the context of savings. And the last point is the fifth value proposition. And that is around the product itself. Interestingly, product features mattered most to only 15% of our female customers, but receiving education about them is nevertheless important. I mentioned low levels of digital education and access to mobile devices earlier as a reason for non-use. Another reason is the complexity of products. Financial education and information in general is better retained when it is provided in digestible portions and at the time when it is most relevant. That implies that we understand how a woman's life stage affects her financial decision-making and that education offers a response to it. So overall, and across all Scale to Save projects, we've seen that coaching cultivates greater trust in the bank, more confidence in using bank agents, and enhanced motivation to save. If you would like to learn more about the Scale to Save initiatives and how coaching has enabled the use of financial services to women, you may want to pick up this brochure that we've laid out, and you can also receive an e-copy if you approach me after the session. I would now like to conclude with a few messages for implementers, service providers, and policymakers. It seems nearly impossible for banks to address the many factors that shape a woman's experience in formal savings. There are limits, I believe, to how individualized and nuanced the customer interaction can be, especially when small amounts are involved. But partnerships certainly help to formulate a more appropriate educational response. And a multi-sector approach to financial education is needed, which encompasses governments, supervisory authorities, professional bodies, private institutions, NGOs, and multinational organizations. Lastly, I believe banks can do their part for more nuanced engagement with women if they can internalize, collect, and analyze disaggregated gender data more systematically, so that these data can better inform financial education initiatives that help women to make easier and better financial choices. So thank you very much for listening. And I'll be staying up here for comments or questions.
Thank you very much, Veselina. Thank you. I have one while you're thinking about it. And also remember, if you're watching online, you can put a question on Slido, just use the QR code to access it. And there's really two questions I wanted to ask. I want to come back on this question of digital exclusion that we talked about in our first panel and how the gender gap has got worse. And you talked about, it was a combination of the lack of financial digital education and the lack of access to mobile devices. This is clearly in Africa an absolutely central problem. What do we need to do, particularly we're talking a lot about the financial education, the skills side of it, but without the internet access, without the mobile phones, without, I mean, how do we avoid that we simply exacerbate digital exclusion?
I think the service offer is about variety. So digital will be at the forefront, and digital solutions have to be less complex and simpler to use, not only by women, also by low-income men. in the south. And we see a lot of women already being very knowledgeable about financial services that address their personal needs. And they deal with these services in an informal manner. So there are thousands of savings groups out there that are run by women, that are managed by women, where women use the savings to invest in sustainable business opportunities. And that happens in parallel with the formal sector. So I believe if education and the service offer can tap into these informal needs, then we will probably have a better chance of seeing more women using formal financial services.
And the other point you made right at the beginning about no one size fits all. But you've identified through talking about what we need to do, what your approach is based on when it comes to scale to save. Are there some key ingredients that are for you? What would you highlight as most important for programs and projects like this to succeed? So if others are looking to launch similar projects, what would your advice be?
Yeah, I think, and this is very challenging, that we need to do a better job in understanding what women's needs are along different life stages. So we are able to offer services to wives, to students, female students, to group leaders. They all have different needs. And this is the most challenging part, because what we see is that education and services are built on generalized data analytics, and it is very challenging to collect disaggregated data that look at young women, women that are coming out of school, women that are about to getting married, women that are about to form a family, because these will all have different needs, obviously.
Thank you very much. Any other questions for Messalina before I let her go? In that case, will you join me in thanking her very much indeed? Thank you. Thanks again. Our second and final panel, women's financial education amidst new challenges. Let me first introduce our speakers and invite them to come and join me on the stage as I do so. Professor Dr. Bettina Fuhrmann, Professor of Business Education at the Vienna University of Economics and Business. We heard from her earlier from the audience. Now she comes and joins me on the stage. Caroline Schriever, Executive Board Member at the Deutsche Sparkassen- und Giroverband, DSGV. Very warm welcome to you, and apologies for the German accent, which is never all that good. Now, I have a special request for you. There's apparently a little bit of sound in that speak. So as there are only three of you, I'm going, in fact, I was going to give you a mic, but I think Becca, could you move one? That's marvelous, because we have a strange, it's fine online, but there's a strange lacuna in the back of the room in that seat. So as there's only three of you, we don't need to use it. Petra Yilkema, Chairperson of the European Insurance and Occupational Pensions Authority. Is Petra with us or yet to join? Not with us yet. Never mind. We will, I'm sure she will join us very soon. We are running a little early because our panel, our speakers have shown such great discipline. But it gives me more chance also to ask you some questions. So before I launch our discussion, and I think in theory, I've got the Slido to work now. So we can do it with a show of hands if it doesn't work, but in theory, if you go into Slido and you click on the polls button, as distinct from the Q&A, you will see the first question I would like to ask you. And that first question is, given the cost of living crisis, should financial education programs focus more on how to make household budgets go further, or continue to address a wide range of financial education topics? So we're talking about these uncertain times, and the particular challenge is not so much about accumulating wealth, now building your wealth and saving for a rainy day. It's more about how do you manage in these difficult circumstances. So does this mean do you think this means financial education programs should be changed to reflect that? So we give you a number of options. Yes, they need to be adapted to reflect tighter budgets and a greater potential vulnerability to scams. And that's something I very much want to come back to. Are we in an era where because of easy access to online products, online payments methods, actually it's a riskier world, and what does that mean for our financial educations? Or do you think actually, no, it's that broad financial education? We talked about teaching basic economics in school. Is it more about ensuring that broad financial education, or do you not have a view? So if you could vote, not seeing any result, I'll give you a couple of seconds. And if it, here we are with, interesting. So at the moment, and I don't know whether that's just because 2 people have voted, but at the moment, 100% saying we need to adapt our financial programs. No? Sorry, did you vote online? No, I couldn't. You couldn't vote online. Okay, let me also do this. So I think one person managed, people didn't. But let me then in the room do this by a show of hands. Do you think, yes, they need to be adapted to take account of the challenging times we're in? If you do, raise your hand, please. Or do you think, actually, no, we need to continue with existing programs. We need to do all those things we talked about in the last session about reaching out to more people and so on. But that broad financial education is what matters. How many of you think that? It's quite evenly split. So thank you very much for that. I also just wanted to touch on one other issue that we've sort of talked about in all our sessions, but just to get a sense of where you think the most important target moments are. And I think your answer to this might be all of the above. But at what stage in life should we be introducing financial education with a focus on risks, particularly including this question of identifying potential online scams, how you deal with that and so on? Is this something we should start right at the beginning, even in the under 5s? Or is it something in the 5 to 10-year-old range? We heard earlier, Anne was talking about their Girls to Tech targets the 10 to 12-year-olds. Others talk about we need different needs, different stages. So is it under 5s, 5 to 10s, 10 to 15s, or 15 to 20, or other? Let us call ourselves the rest, not the elderly. I refuse to use that word. The older is the word I always prefer to use. We have we seem to have a little bit more success with the Slido here now. So at the moment, our audience is saying it's that 10 to 15-year-olds. Some of you, nobody thinks it should start under 5, but a quarter of you think 5 to 10-year-olds, and a quarter of you think 15 to 20-year-olds, and then there is that but where it's coming through strongest is the 10 to 15. So it's a little bit of an adjustment. Interesting, at the moment, nobody voting that it's the older. And when we come back to that issue, which I'd like to discuss about your different financial needs at different stages in your life, maybe this is because perhaps there's a lot of focus on what's happening in schools, what we do in the education system, and less on the lifelong learning aspect of it, which is where financial institutions are really coming in more. I mean, we did hear about your role in the classroom in some countries, definitely not in others, but lots to come back to. So thank you very much for that. Absolutely fascinating stuff. I now do have a bit of a result also on whether we need to adapt financial education programs, and most of you thinking yes, they do. Yes, we need to reflect the fact that we live in these more difficult, uncertain times. And I've now had a slight disaster because my Slido has disappeared. I'm hoping it'll come back. Oh, I think I have to relog on, which would be a slight disaster here. Hang on a sec. Anyway, for the Q&A, let's just do this in 2 stages. I'll worry about that in just a moment. The technology, an exclusion of a different kind. Let us just, first of all, let me just start. Bettina, as I say, you've done a lot of work in this area, I know, and you were giving us some data earlier on. In terms of the situation we are in now, these very uncertain times, these challenging times, do you think this is having a serious impact both on the risks that consumers face, but also on, I wanted to come back to the gender gap question. Is there a gender gap when it comes to the risks that this poses as well?
Well, the first thing that I would like to ask is, do people really have an understanding of the term risk? And I think for most of the people, the answer is no, because they sometimes are afraid of some things, but not at all afraid of others. And if they had a deeper
understanding of what risk really is, they would see that risk is always and everywhere, but only to a certain extent. And I think what makes these times different is that risk has become more visible, but also only some of the risks. Yeah? So for example, we have heard that women invest more conservatively. Therefore, we conclude that they are more risk averse, or however you will put it. Yeah?
That's true.
Well, in a way they are. The data that I have show that they are not willing to take a lot of risk. But what they do not really see is that by saving very conservatively, they also take a risk. At the moment, they take a very high risk of losing the purchasing power. And that's the risk that they do not see, because they don't have a real understanding of the effects of inflation, of purchasing power. They just see what they risk, what they might risk if they invest in something like stocks, for example, or bonds, but they don't see the risk they are taking if they are choosing something else. So I think that many people don't have a full understanding of the term risk, and they also don't have a full understanding of opportunity cost, which leads us to what we have discussed before, that they also need a basic economic understanding. Yeah, because whenever you choose a specific option, it also means that you do not use another option. And you need to understand what you are missing now, what you are, so to speak, what you give up, the best alternative that you give up. And therefore, I think what we actually need, especially in difficult and uncertain times, is a better understanding of basic economic thinking, and that there is risk always in our life, but that we need a better understanding of risk in order to evaluate the risks, see which risks we can avoid and which risks we have to manage. And if a woman, for example, thinks that she wants to be on the safe side and puts all her money on savings account, maybe more than she would need for her rainy day funds, then she's also risking something.
Mm-hmm.
And the probability of losing at this time is 100%.
So we come back really, and a very warm welcome, Petra. And it's not, you're not late. You're not late. We were a few minutes early. So I apologize for starting without you. But just so that you know, so we have talked, we started the discussion today talking about what drives the gender gap. In turn, and there was a lot of discussion about, is it a lack of knowledge among women and girls? Is it a lack of confidence in using that knowledge? And we came to the conclusion, lack of confidence is an important factor, but lack of knowledge is key. We talked a lot about, should we have more, should we try to reach more women and girls with generic financial education programs, or do we need to be much more specifically targeted on them to make those programs appealing? We talked about STEM at school and all those issues. We did talk about the role of school, and I wanted to pick up on that point, Bettina, because one of the things that I found quite shocking was to hear that in some countries, basic economics, basic financial education has only been introduced in curricula in the last 1, 2, 3 years. So it's still new ground. And that very much goes, I think, to your point you're making. And we also talked a little bit about role models, mentors, lack of women at high levels in financial institutions, how important. So that just brings you up to speed. And here, as you know, where we want to focus is really, does the changing environment where we are now, the difficult challenges we're facing, the cost of living crisis, energy, the war in Ukraine, so much uncertainty, does it change the way, or should it change the way we do financial education? And interestingly, our audience felt it should. In the room, it was more balanced. No, we just need to keep going. But online, quite a strong call for adapting financial education programs to teach more about risk and so on. So that, I hope, brings you up to speed. I'll give you a chance to catch your breath. And Carolyn, just coming back to you in terms of that impact, the impact of these uncertain times, and whether here, as in general terms, what about that shocking gender gap, not just in developing countries, which we might have expected, but in Europe as well. Do you think the risk is the gender gap in terms of the risk as well?
Yes.
Yes, definitely. And thanks for your ideas and thought, because I see it actually exactly the same. And I mean, I remember the times when we were the questions, are you risk aware? 10, 15, 20 years ago, when it started to develop, the risk understanding was completely different. And even then, I remember, and especially women, yes, we are risk aware quite often. But now when I look to the world, there's a completely shift and in the definition of risk. So we have inflation, we might have a recession, we have new products, crypto and Bitcoin and all these things on it. The markets are more volatile and more complex than years before. So the definition of risk is a lot more wider, a lot more complex. And here is why it is so important to help in terms of financial education. And we see, especially now, really a gender gap in terms between man and woman. So the risk is for everybody the same, but we still see the gap. And when I now think more and more women coming into forced to work, to stand on their own feet, to go for a job, to go for a career, which I really love to see, but then to say, you have to make sure that you understand not only the financial side, you have to understand the economical side as well, to get in touch with the risk and think of further look on your pension gap, which we see it's quite big in men and
but we
women.
face, if you like, a slight dilemma here, don't we? Because you talked about market volatility, which would make many people more risk averse. It's volatile. I'm not getting involved. I don't know. And then you talked about inflation, and Bettina referred to the cost of doing nothing. So in a sense, this situation is leaving us with saying, well, you really need to do more than you did. Oh, but it's way more risky than it was. I mean, just to follow up on that, and then I'll come to you. How do you see that balance between, if you like, underlining the cost of doing nothing with reassurance about the risk that people are taking?
Yes, I see. So the cost of taking nothing, I think it's higher than the cost of doing something. And the good thing about it, so I don't want to sound so pessimistic, there is a shiny light at the end of the tunnel, is that now, because now the feeling everything comes together in terms of what you can even imagine in terms of risk, that you now see people get first aware of that, and they are starting to ask, and the commissioner, she was asking, but they ask finally starting questions. And I think that is the first step into balance that two kind of risk, but to lead to a solution to balance the risk decision and to reduce the gap we still see.
And Petra, you're in the field of insurance and occupational pensions. And when we talk about challenging times for public pensions, debates in many countries about can we afford them, as some are being cut relative to, certainly in light of inflation, they're not keeping pace. How do you see the impact of all of this for consumers navigating through the financial world, and indeed worrying so much about today, that you telling them they also need to worry about tomorrow, or investment in private pensions? Seems like, well, thank you very much, but I think somebody gave a statistic that only one third of people are not living week by week. So how do you see this challenge? And do you think women are more vulnerable than men in this situation?
Well, thank you. And thank you for being here. I think this is a very important topic. We look at this and not surprisingly find gaps. So how much do I think there is a problem already without the situation? And then I'll get to the current situation. Yes, there are gaps. And what we see that currently working women make 30% less, but that has an impact on pension. So women in Europe currently stand to have like 37% less pension. That's the pension. The pension gap, by the way, is not just a woman-specific problem. 1 in 5 in Europe, that's 20% of Europeans, is not saving enough for later. And that's a number from before the crisis that we have. And I agree with you, with inflation, that might even be worse. Now, what does that mean when I look at the pension landscape? I think first of all, if you look at the pension landscape, just simply getting people to be interested in their pension is difficult already. And here I might agree with you that maybe now you at least you need to think about it a little bit, but you probably have to think about the short term and to a less extent the long term. But thinking about finance, I think, is important. And I do feel that women can think about finance. They often deal with the finance of the households. They're quite good in saving for their kids. If kids have to go to school, women know how to make sure they have the funds to do that. But why is it they don't do that for themselves? Now, when it comes to pensions, I think one of the first things that happens is that if women have children and they make the assessment on how much effort it is, who's going to work less, and I come from a country, the Netherlands, where part-time working by women is just across the board what is accepted by society. If you work not part-time, you have to explain yourself as a woman. But if you make that decision, I always ask friends who make the decision to work less, I say, and they give me the sum so they can actually do math and they look at salary and cost. I always say, did you include your pension? I always ask that, and they never did. So I think also here, information, education, but if you start working less because of children, that has an impact on your pensions. So, and cost of kids have an impact on your overall income. So I think here, the information part is key. Now, if you look at the overall system, what we do, so you say public pension schemes, they could be in trouble, but there's two more legs to stand on. And I always say in your old age, you probably, most old people need something to walk with. So you have 3 sticks to walk on, 2 legs and the stick. You need 3 pillars. And that means you have occupational pension, which of course will be less if you work less. And then there is the 3rd pillar with savings, which is not just a saving account, which is of course in Europe quite difficult. And Europeans like to save on their bank account or put money in their house. How do you make them use all the products, particularly also investment, insurance-based investment products, which actually have a guarantee in them. They have often a minimum level in that. So particularly if you just want to save and not have a material increase of your investment, but you really, and I want to save for later, but I want to do it in a protected way. Actually, a lot of these insurance investment products might be interesting. They have to offer value for money. That's what we have to watch, but the products are there. Now, if you think in those 3 pillars, that is already a lot. And there will be end of November, we'll have a European Retirement Week, again, asking for attention to pensions, to think about pensions. But I think when it comes to information, you need to explain that simply counting on government to pay for your pensions might not be enough, or at least not enough to keep up with the standard you have.
I'll just ask you one thing that I hear a lot from young people, including my own daughter, runs her own company, doing well, 40-ish. Joe, you need to think about your pension. Oh, there's no point. We're all going to work until we drop. Your generation, it's been different. You had a public pension, you have private pensions. We won't have any of that. So frankly, and I hear this a lot from youngish people, that really there is no point. The situation is so dire, they see themselves working forever. They can't find a property, etc. I mean, Petra, given that, what do you do about that? I mean, there's a council of despair, if you like, saying, we hear you, but forget it. It's not possible.
Yeah, and going back to the Eurobarometer, and we will in our consumer trends report publish more with that. So how much confidence do you have in a financial pension? 56% of the men said I do, 46% of the women said I do. If you then ask, are you going to change your activity going forward in how you deal with your finance? Hardly anyone said yes. So that reflects a bit of what you're saying, like, but what can I do? And that goes back to having tools, online tools maybe, that can help you actually first assess where am I when it comes to pension. There's only 4 countries right now in the EU that actually provide what you call a dashboard, a personal pension tracking system, where you go online, you plug in, and then both your public pension as well as whatever you save elsewhere, except for your house, to be frank, is going to appear on the screen. And you see, this is what you've saved, this is what it's likely to do for you. And they do it with nice cartoons, like how many ice cream scoops could category to get. That's Denmark. I love that. So is it a small ice cream or a big ice? And then what alternatives are there if you think it is too little? But this, and we provided advice to the Commission on how you can develop it. Is not something for supervisors to develop. But that would help, because I think the first step is to get people to look at it and then to act, and products to be available to act upon. Now going back to what you said about the interest rates risk currently. This is something we as supervisors will carefully monitor, because this is our concern, that people have savings in a pension product, but they might short term actually decide to use that now and just actually to get it out of the product and start, even if there is a penalty. It is not happening at the moment. But if this situation, this cost of living rise is going to last longer, it might, well, people are very pushed in that decision. And I think when they make that decision, again, somehow you would want to inform them about the long term. So we are working on that, but it will be hard to reach them because they need to send their kids to school now and they need to get food on the table today. So it will be a major challenge.
Thank you. And to what degree, and Bettina, if I could come back to you, that is one risk, that long-term future. But we have, and people suggested in our first panel, and I was mentioning this perception of an increased risk, not just market volatility, one risk, but also in this online, the digital world, people feeling they are much more exposed to the possibility of scams and so on, and also new products that they may not, and we've heard repeatedly, designed by men, the fintech world very much dominated by men. How do you perceive, or how does anything in your studies show how people in general and women in particular are perceiving this sort of broad range of risks? And is it a question of raising awareness of these different risks, or is the awareness there and that in fact is acting as a brake?
I think, again, knowledge is key here. Of course, they see there is a whole range of products and a lot of fintechs on the market. And again, what I think is key is that you understand what can be true and what is too good to be true. And their knowledge is key here, because if somebody offers you a big win and you just need to return some data or make a bank transfer to somebody, then of course all the alarm bells in your head should ring and tell you that's not possible, that can't be true. So I think it's very important to have a basic knowledge of what can be true, what is realistic and what is not, and also to raise awareness of how important your personal data is and how it is usually handled by serious business partners and what they would never ask you to do. So if you just receive an email by anybody, just using a logo or something, telling you to write an email back with all kinds of information, that's what a bank or another serious financial institution would never do. So I think education is key here, knowledge is key here, and also making people more self-confident that they can always pick up the phone and call and ask, did you send me that email? Is that something that you sent to me? It just takes a minute, but it can save a lot of money.
And I don't know how, Caroline, you answered the question I asked the room about, do we need to change financial education programs in light of the situation and the potential? One's vulnerability is greater in a situation like this. I don't know whether you felt, actually, no, we just have to do more of this basic teaching. And if we do have to change financial education programs, how do we, Bettina says one of the very obvious things, if it looks too good to be true, it almost certainly is. And so where do you see, what's the key to really helping people to understand and manage the risks, but also then take advantage of what they need to do in order to preserve their savings? How do you see it?
I think you mentioned already a lot, but I think what is really important and make the big difference is financial literacy. So we notice that especially women, and there the vulnerability and the financial gap is coming from. They are less confident, they invest less. And if they invest a little, then it's always secure, and they want to be fully aware of all all the risks they might understand. So, and financial literacy, and that the starting point must be the schools. We can't start with this when women are already having their first jobs or going to the university. That is way too far. To give a bit of sensibility already in schools and to make financial literacy work, meaning, and especially for women, gives them the room they need. They have less confidence, so they need not only the knowledge, they need to ask the questions, and therefore they need the room to feel okay and to ask these questions. That little stories we are now talking about, I think, and this private environment is really good to see, okay, we are all sitting in the same boat, we are all making the same experience. And that is maybe the key point.
And the Commissioner touched on that when she talked about the confidence to ask what you fear might be the stupid question.
Yeah, I would go a step earlier and say we have to give them the room that they can put them in a position they are okay to ask.
And how did you answer that question, or how would you have if you did vote about when to do this? Because the majority of our audience said 10 to 15 years is the right age to be doing it. Did you agree with that, or would you start younger?
Maybe not younger, but 10 it should be the latest actually. Yeah, so we started with my, it's now 11 years. We started when he was 8, 9. I saw the first questions coming ahead. So I think you can maybe start a bit earlier, but then it should be the latest. And I would then say, of course, long life learning, you should start at 10, the latest, and then keep on going until you are retired. And even then you can still learn and do something.
I mean, would you say, Petra, in the situation we're in and talking about the attitudes of young people, we all know, who say the things I was quoting earlier, what age does this sort of education need to start, and particularly now in relation to, I imagine saying to a 10-year-old, now you're going to have to start thinking about your pension, and they look at you as if you were crazy, but nevertheless that basic understanding, when does it need to begin? And also when you look at the range, again, in your area as much as any other, the range of products available, the sort of terms people use, people talking about compound interest rates and sustainable. We Brussels people think everyone knows what sustainable investment means. I question whether most people know what the word sustainable means at all, but that's, how do we overcome that? How do we, what is the language that we need to be using here, and when do we need to be doing it?
So I would say start at an early age, and then the lifelong learning is, but really identify the key moments where financial decisions are being made, and then tailor make it also to the need of women, which means that you're not thinking about putting a product in the market. No, you're thinking about reaching different sets of consumers, which is the way of product development. Now, I personally, I always was involved. In my previous life, I once was the supervisory board member of Child and Youth Finance, which developed Global Money Week. That's now at the OECD. Many countries in Europe participate in Global Money Week. It's 1 week dedicated in elementary school to financial education. And I think it's a great way of, first of all, having anyone who is in financial industry. In many countries, that week goes 1 hour to a school and just teaches. But I think it starts with teaching savings or even the basics. So when my kid was 4 years old, in very elementary school, I just made a box, which was an ATM, and I put a child in front of it and behind it. And I just let them take out money. But I had piggy banks, and I tried to teach him the concept that maybe money just falls out of a wall, but it comes from a piggy bank and you cannot touch the other piggy banks. So I had collars. So I think it comes already from that. So if you have money, just because with virtual money, and I think that's what the little kids need to learn. Everything is digital these days, but it's real. And it's only your money that comes out of the wall, so it has to be there. The next step is savings, and savings you can explain, but actually it's hard to explain. My daughter is 90 years old. A year ago, she literally said this to me, Mom, you really need to explain to me this concept of savings, because how does that work with interest rates? And I was like, true. She grew up, I mean, from 12, like by the time she was more conscious about finance, interest rates have been like 0 or
so what's the point?
So what's the point?
Yep.
So, and that was when I realized that there is a whole generation that's not used to saving with interest. So that's a new dilemma that we need to deal with. Huh? So, and then finally, you go like 16-year-olds, they have mobile phones, they make debts, but they're virtual debts, but they're very real. They have scooters. So there you go. When you study, But then once they go study, I think the tooling stops.
Yeah.
Whereas you get married, you have babies, you buy a house. And this is
So
where
look
the
at those
tooling
points,
stops.
yeah.
And we
Yeah.
need those as well. And they need to be much. If you
Yeah.
tell a woman you need to invest, they will think, oh, I think that is difficult. If you tell a woman you are very good in saving for the studies of your child, why do you not also save for your pension?
Yeah.
Then there is confidence because they actually realize, oh, I can do this. Yeah, why am I
Yeah, yeah.
help them?
Caroline, can I just ask in terms of, I know that you, your ESGB, you have a lot of literature, a lot of things you put out, which try to build that financial education. When it comes particularly to vulnerability, so the scams, the risks that are associated, particularly at a time like this, when people might be more inclined to believe that something that looks too good to be true is true because they want to believe it, because they're desperate.
Yeah.
What are you doing, and what does your literature do to try and help them identify when they are at risk and understand risk?
We do actually a lot, but maybe give me the 3 examples that I find, and especially now in terms of the crazy situation we have outside is really working. We have the consumer consulting service. So we just give people, and that can start when you first open the account at the bank, we just give them, and that sounds very easy, but it's very effective, an overview. What are you spending for, and what are the costs? And then when there is a kid and says, oh, I used the step, or I used the phone that is €1.80 or €11.50, that we make it very present, and that helps a lot. And now we put, I was talking prior to that to the need of giving women the confidence to feel okay in that room. So we now combining it with online services. So we have 2-3 meetings, online versions during the week, where women from our side tell other women in a, let's say, a safe room to say, okay, what is it now about? What is, and they pick up different stories, like today or this week we have the saving week. So what is about saving? And then women talking to other women, and that are women, they have kids, they are having jobs, they one is just got married, the other one is building a house. So they put in the personal stories, and so they combine the overview, which everybody's seeing, with personal stories in a just for women.
Call it a safe room. Is that because you need to create an environment where they have the confidence to talk about what they don't know? And
Yes.
Is that what you mean?
Yes, exactly. Where they have the confidence to talk, to ask the questions, and it helps when other women say, oh, we struggled when we wanted to buy a house. We struggled and now we struggle because interests maybe change, they are rising. That is maybe a struggling moment too. And so we open with personal stories. We open a kind of a platform for other women to start asking the questions. And then we, of course, we have different podcasts we are using, because this is quite in times a very useful tool as well. And then, of course, we have the stock market.
I want to ask you about that. Yes.
the Planspielbörse, we are called it from Germany, where you have, and we are doing this, and that is amazing, for over 40 years now, and there are over 90,000 students already attended. That is amazing.
And it's a simulation, isn't it? They
simulation.
actually go and buy stocks and shares.
They have to buy stocks, shares on the current market situation, and the best team win. But that is the starting point. We go into the schools and say, here is virtual money, here's the stock market. So please pick up the shares, make of what you have, make it greater, make it more interested. And the interesting journey you see with these kids is, and these students, they start asking the question. They are starting to, oh, what is risk? What is sustainable? What is that company doing we want to invest? And sometimes they invest and they say, we believe in the purpose, but maybe we don't make any money within the next 10 years, which is totally okay. But that is, and there the conversation and the thinking process starts. And the interesting thing is when the Planspielbörse was starting, it was 10% women, not even, and over 90% boys man. And now we are at the rate of 40% women. So we saw
In how many years?
within the last 8 years,
Wow.
it was, yeah, and 60% boys. And I hope within the next 2 to 3 years, it will
Just
be
to
really
follow up very
balanced.
quickly on that, Bettina, then I'll come to you. How did you manage to increase the number of, so, because we're talking a lot, and I want to come back to vulnerable groups. So
Yeah.
how do you, when we asked earlier, is it a question of making sure that we reach more people with financial education? What's been the trick to increase that female participation, do you think?
I think 2 things. I think it's a combination of other things. We were hearing at the STEM thing, and we were hearing make the tech part more fun for
Yeah.
girls as well. And when they see this, yeah, financial stock market can be fun too at a certain point. So I think it's a combination, and I think it's different tools and we are using, and we, of course we're changing the communication. We are actively asking, so why are there so little so less girls on that? Why is it? And once you ask, you say, oh, we were not aware that we can.
Yeah.
And we said, of course, you have to, and then it becomes a different story.
Bettina, what do your studies, I want to come back to this confidence issue, because it really seems to be running as a red thread through all our discussions, and the Commissioner talked about confidence a lot. What do your studies tell us about why the lack of confidence, and what, particularly at a time like this, works to address it, to make women and girls feel more confident that, coming back to this risks and responsibilities, that they get it, they understand, and that Petra's daughter, who says, well, I don't get this, I don't get saving at all anymore. I'm impressed that she knows what interest rates are. That's really, yeah, you explained that. What do we know about what works?
You know, what we see in the data, and not only in the Austrian data, but I think in many other countries as well, is that basically women are outperformed by men when it comes to financial knowledge questions. But most of the time, these questions are multiple choice questions. And what we also see, that we have a kind of test effect here, that women use these multiple choice questions, and they answer these questions differently compared to men, because when they feel insecure about the correct answer, they would rather answer I don't know, or give no answer at all, while men, they just pick an answer and sometimes they're right. Yeah, yeah. And, yeah.
If any men in the room would like to fight back.
No offense. No offense. Actually, it's a clever move, right? And what we also see is we don't only ask questions, but we also ask, and how confident are you that your answer is correct? We see that men are also sometimes insecure about their answers, but they are, as I said,
but they gave an answer.
But they gave an answer. Yeah. So I would not overestimate the difference in knowledge, but we see that that a lack in confidence has already plays an important role when it comes to knowledge. Yeah, and then another thing that I have already mentioned today is that very often in a partnership, you find that there is a kind of division of labor where women more focus on the daily money management and the daily purchases, and they do that very well. And men or the partners, they focus on the big financial decisions. And of course, this works fine as long as the partnership works fine.
You made the point from the
I
audience.
made the point already.
What happens when you split up or a partner dies?
Absolutely. Yeah. And then there's another thing. When it comes to choosing a profession, what a lot of young girls do, especially if they come from a lower socioeconomic background, is they choose the same professions that their mothers have chosen. And they see that their mothers do a lot homework, and they do a lot in the household, and they see that as a role model, and they think that that's the path that they should also follow, because they have seen that for many, many years and think that's the right thing to do. So again, without even knowing, they are taking a very high risk by not informing themselves about the alternatives, but choosing the same profession as their mothers or some other female role models that they know and see, and they really miss a lot of opportunities here. Then again, when they then have a family, when they have kids and they stay at home, they are not aware of the effect of not working or working part-time for a long period of time. And again, they don't see the risk in this. They think it's the wise thing to do. And of course, every woman should make her own choice. But at the same time, she should always be aware of the effects later. And although you feel young and healthy at the moment, the situation might change in the future.
Coming out to all of you in a minute, but I just wanted to come back, Petra, and ask you, when we talked about pensions, we were talking quite a lot about just the younger generation in general. But do you see a distinct difference in the way women view this and men view it?
Looking at pension.
Looking at pensions.
Well, again, then what I said is to start with, we still have 1 in 5 Europeans in general not saving enough for it. I think there's a dependency in some member states to a large extent on the.
Do we know what the male-female balance
we don't,
there
but
is?
we do know that there is as I just said, that the pension gap we estimate now is 37%. Now, I think it is and I think that is very much related to indeed women stopping working, not including that assessment in their decision. It is also women choosing professions that on average pay less. And here you see that the payment gap of 13% can translate to a 37% pension gap in the end. That's another one. And finally, I think across the board, Europe can improve here, but definitely also women, because they are more risk averse, is that if you think about saving for later, it's not just your savings account. It's not just the house you share or the pension income of your husband, but you could also save or invest or buy an investment product, maybe with a guarantee with some insurance, if you need that security, to have different routes to, in the end, when it all adds up, have enough to actually take care of you. And I think one of the more appealing ways to explain the need to save for later is that if once you've brought your children and you've taken care of them and they're in school and you brought them through studies, you don't want them to then have to take care of you. So I think taking care of your kids means that you want to have a pension. So I think
very true.
Yeah, I think it's powerful for many parents to actually start saving, and particularly for women.
Something I always say to our kids: we may not leave you much money, but the one thing I don't want to be is a burden on you when I'm old. Although my mother, who was quite a character, used to say, I want to be a terrific burden, and I want to pay for everything. So there's a balance to be struck there. Thoughts in terms of the challenge, particularly in these difficult times, these uncertain times. Anybody want to come in with either a comment or a question to our panel? Let me come back to Gabrielle first, and then I think I saw one at the back. Wave again. Yes.
There's one thing, a lot of what has been said now is very true. And in those challenging times, we need more advice. So I don't think we can be very specific in school and the broader education. That has to be done then in the lifelong learning, or by institution, or by banks, because actually that would be an ideal role, because that's what we deal with on a day-to-day basis. And although the commissioner, and I appreciate almost everything she said, said that it's a big point in also what the politicians are looking at and enabling. It's also a thing like that banks have been banned from schools is a political decision. Yes. And the second thing is that now we see those rules like MiFID, which is a very technical term, but regulates the way we talk about securities with our clients, creates a huge entrance barrier for the average person and the average woman we talk about. So I think we have to be very careful not to over-regulate the banking system, because then we cannot do what we should do, give advice. Yeah, it's not just that.
Perhaps that's not taken into account. This conversation we're having isn't taken into account enough in the regulatory discussion.
We have to be careful about that.
Thank you very much indeed. Let me come round.
Can I make a comment on that?
You certainly can.
So and a very concrete step we can take here is that if we as supervisory community get the request to come up with a two-pager that is for consumers to understand what they're doing, we are asked to do that jointly. So with ESMA and EIOPA together. But what does that mean? It means that in one document, a two-pager, we have to address a professional portfolio management community and the retail investor that just wants a saving product. And I keep sending this message, I'm doing it again, is I like efficiency. I love to work together with ESMA, but I think in this particular case, we need two sets of documents. I need something way more simpler to explain to a retail investor, and maybe then not every product fits. Well, then just limit the number of products for that document. But that is so much more simple for people to actually understand what they're buying. And that is currently just not in place.
Thank you. Bettina, you wanted to come in and then I'll come to you.
Just a very short comment. We talked a lot about curricula today also, and that now financial education is integrated into a lot of curricula. But I think what needs to be mentioned here is that we should have a closer look to which extent it is integrated and at which point at school, because actually with financial matters, we see that with the growing complexity, we should talk repeatedly about financial issues at school. And what I see in a lot of curricula, that it's mentioned once, and of course then adequately according to the age of the students, but then later as financial issues grow and become even more important, it's not covered anymore in the curriculum. And then again, young people are left alone with the questions, with all the issues. And I think that it's not enough to integrate it at some point, but make sure that over time, students develop a growing and deeper understanding of financial issues, because they deal with them each and every day. Yeah, they learn more about the stomach of a cow than they learn about dealing with money. And I don't think that they have to deal with the stomach of a cow every day. Yeah,
but also that you're linking very much that point about those key points in life. So when they go to university, different points, but you wanted to either ask something or say something.
My name is Stephanie and I am responsible for the African region in WSPI. My question was, regarding the fact that the gap between men and women, I think women tends to lead more, everyone tends to lead more on where the recognition is due and is given. And for me, as my personal experience as an African woman, I tend to be more recognized and praised for being a wife, for being a woman. And it was very well said when you said that when it comes to financial, they know for the household how to manage the money. Because for me, I was raised in that way, even though it's in a subconscious way, you don't realize it. They know how to save, but only for children, because we are seen as the leading and giving the new generation and really holding the family, which is a small society. So my question for me, as I was growing up and going out of the way I have been raised, I tend to realize that taking risk, investing in me and putting myself first was clearly sometimes in contradiction to what I was born to do. So looking up to you ladies who are obviously very successful, but also a minority, how was your journey to that successful step? Because, and just because for me, I tend to find a lot of battles into going there. So I'm asking, was there a battle for you, or more so of your environment encourage you to do so?
Thank you very much. Super question. I'm just going to take, before we come back and give you a moment to think about that, there's one more over here.
My name is Elizabeth Ottawa. I'm from Schroders Investment Management. I have 3 comments.
Hang on a minute. I think it may have turned itself on. Oh, sorry. Oh, sorry. Let me hold it. There we go.
Okay. So my name is Elizabeth Ottawa. I'm from Schroders Investment Management. I have 3 comments. First of all, I think I really want to endorse what you've been saying, that we need to start at a very early stage about financial education. There are studies that show that by the age of 7 already, financial habits are formed. So actually we need to start much earlier than in school. We actually need to start in preschool, and there is a shared responsibility, of course, by kindergartens, but also by parents. And it's, of course, much more difficult now with everybody paying by card. And it's not, it was much easier in my days when you were, doing the Kaufmannsladen. So that you went to the small grocery store in your children's room, and you paid with the coins, etc. So it's really something that we need to work on at a very, very early stage. My second comment would be that was to the point in times of crisis. I think it's ever more so important that we keep up our motivation to educate people about, engage with people. I would rather say educate is such a patronizing word. Engage with people about investments and how what to do about their long-term aspirations, be it buying a house or pension, retirement, etc. And what we've been seeing in particular during the COVID crisis, the link between financial health and mental health and physical health. So we cannot stress that enough, that if we tackle financial health, we can also make sure that people stay healthy as regards their mental stage and their physical stage. My third comment, my third comment would be, and that's particularly to what to do about financial engagement with women. One of the most successful programs that we've seen in the past was in the UK, where women were actually addressed at their midwife consultations. When they got pregnant, they were, of course, thinking about, oh my, I'm having a child. How can I make sure that I'm providing for its education, etc., etc.
So a moment of opportunity.
Exactly.
There.
So I think when we're talking about this lifelong engagement with people about financial questions, we need to make sure that we use behavioral science, and we need to use nudges where people are most receptive to questions about their finances.
That coming through very clearly, it's those crucial moments when people are both need the advice, but also more receptive to learn and acquire the knowledge. So coming back to that question about the journey, your journey, but I want to take that in two ways, if I might. I would like to know about your journey to this and why you are those role models we're talking about. But I'd also like to know what you think we need to do for those who are hard to reach. Because we haven't really, we've talked about women in general, but we haven't focused on, for example, migrant families. We haven't focused on refugees. We haven't focused particularly on the very, very low paid, the single parent, the people who are not, they're not looking at financial products at all. They're not even thinking about this. How do we reach them? So, and I put the two together because there's the inspiration that comes from your stories about your own journeys. But there's also, what about the people we're not getting to at all? In terms of your own story and how you got where you are and why you're in the sector you're in, how did it come about? Fairly briefly, if you would.
Because I think, and it starts from very small. Yeah. So my context is a family where mom and dad always both work, where the oldest daughter of 5 daughters. And my father always saying, no daughter leaves the house without a college degree or a good diploma to get work, a driver's license, and birth control.
That's quite exceptional.
And once you have all that, you can sort it out. So whenever we were meeting with him, I want this and that. Do you have the free? Because then you can be totally independent. Until then, you have it there. And I think that is how we raise it. Does that make it easy? No, because there's an outside world. And I think that is all. So it's your base. And I have 4 sisters to go back to. We're all financially independent, but we saw, not all of us, but those who have a husband is a very supportive husband. But it is, I think the next context is the husband you have, the friends you have that support you in doing that. And it will be key, because what is society doing? When I was a child, why is your mom not at home? I was very, very sad that I had to actually have lunch on my own at school. That was very sad for me. And now with me working full time, it's the same. The feedback, particularly women. As women, let's not ask another woman how, if she says I work, don't ask her, how do you do that with the kids, but ask her, great, what do you do? Yeah. Let's start with that. So I think we need, so that's the first. About the reaching.
Yeah, because the people who don't have your remarkable father, quite remarkable, and the people who don't, who are in those situations where they can't see a way out.
Well, I think I see a few ways to deal with it. I think, and one of my big examples actually is the queen of my country, Maxima, who's also reaching out to people who are in debt. And there's many women who are in debt after a divorce or after losing job or after losing. So I think it goes back indeed to, I think, what I was told, that how can you be yourself financially independent? And because if you have financial independence, I think it brings so much in life. So I think the first way to reach that is through the roots. And then I think the lady back in the room indicated there are roots. So if it is through certain areas where it's through the hairdresser where everyone meets, if it is through we have like these places now where people can actually get food. If you are really vulnerable, you can get extra food at some spots. What if you look there into how are you doing financially? And I think the focus of this campaign now is about making people talk about debts, because here you're no longer talking about savings. You're talking about debts. You're talking about not opening meals. So how do you make people start talking about that before the debt becomes too big? I think that is, and there you need programs. And because once you start talking to it, you can start solving the problem. But you need the discussion. You need it through those routes. But I think also, unfortunately, even working people now have worries about that. And I think there will be more. So how, as an employer, can you recognize people with that? So I worked for an employer that had programs for managers to look out for behavior that might indicate trouble, and trouble might be debt. So I think that is a way where, as a society, we can try to see, because I think there are many front doors behind which there is more poverty than you would expect from the outside.
So Caroline, same question to you about your own journey, and then also about, we've talked a lot about your role as close to the communities that you're in. That's the whole point of your type of bank, this link with the community. But therefore, but still for you, I imagine finding the hard to reach is a challenge.
Yes, absolutely. So maybe for question one,
your journey first.
My journey, it's a bit different, Petra, than yours, and a bit similar maybe to yours actually. So my parents, especially my father, he worked always. My mom, she worked too, but she was always the focus on, she was a bit, let's say, in between. She had always the focus on educating me and my brother, who's a bit younger, and she stopped. I'm from Germany, so it's usual there, and that is a difference too to when you get pregnant, when you have a kid, you stop working for 2-3 years, and then you restart, and then the next child you stop again. So it was always very the focus on the kids, and especially my grandparents. They were absolutely like you described it. But for me, let's say my feeling about who I want to do this, I noticed there's something more to learn about, more other questions I can ask. And I can tell you, when I told my parents, so I would like now to study, I will have debts. I don't know what to do after. Maybe I find a job, maybe not. I have no clue actually what I really want to do. Just the finance sector, that was the only pretty clear thing. They were in shock.
But why was it clear? What made it clear?
Because I had so many questions. I had so many questions of my parents couldn't always answer, but they always how can I say it, wanted me to ask the question. I think that was the key point out of it. And so that was the reason why I just started, and it was not always easier, but once you started, listen to what you want, listen really to what you want, and then it's really a big part of that is the base of the solution. And there are a lot of people around you. You open your eyes, you will see there are a lot of people around you will helping you. Ask the question. That is the only advice I can give you, and listen to yourself. That is the best advisor you can get.
And then getting that advice to the vulnerable, finding them, getting to them. What is the key? And we talked in the last session about digital exclusion.
Yes.
Because we talked about the great benefits of so there are apps, there are social media apps, but we're talking often about people who don't have access to any of this. What do you do to try and get to them?
Yeah. So I noticed that I'm coming from a very rich country, and with all the possibilities we have, but it was always, again, feeling that not everybody has the same possibilities. And so this is why I am now, and I can just say with the Sparkassen Saving Banks organization, I'm so proud working there, because it's really the main key, the main focus on social security and social balance. It's really a great company to combine the finance sector risk, even what is possible. And just to give you an example, when at the 24th of February, when the Ukraine war starts, with the saving banks, we were the first ones to say not everybody of the refugees has an account. And then we come to the point of regulation. It's not so easy to open an account when you come from a country maybe without an ID card or anything else. So we made that sure that everybody had an account. And then once you have this step done, then the rest, the other steps are follow. So it's a combination of things. And I really agree to what you said in terms of regulation. There, the policymaker has to make a difference. We are not finding new clients for an investment strategy. We want to help people getting financial security, asking the right questions, or the questions, as the commissioner said, and get everybody in line and in touch with the financial sector just for your own security.
And as you said, it starts with that very basic, opening an account, being able to do it.
With really basic questions, but with a big and great impact.
Thank you. Bettina, your own journey and this question of vulnerable, hard to reach group.
Well, my own journey started at the early childhood, I guess, when I observed that my mother really had to plan her financials very carefully. The budget, I think, was tight, although we as children never felt the scarcity, but I saw that she planned ahead very carefully. And actually I had a Sparefol like this, which was my favorite toy. So saving money was also something that felt natural and logical to do. And something else that my mother told me is, she said, try to get a good education, learn as much as you can, because that's the best basis you can have in your life. And a good job is the best insurance against unemployment or against low income. And if everything breaks down in your life, if your partnership breaks up, and there's still something in your life that makes sense and that gives sense to your life. Yeah? And I think that's something that I really did. And I think as the vulnerable groups are concerned, it's particularly important for those to make sure that they have at least a basic level of education, and to see that they learn a profession and see what they can do with it. And especially with girls, informing them about the whole range of professional options that they have. Because if we have a look at, for example, girls in Austria who choose to make an apprenticeship, most of them choose among 3 different apprenticeships, but there are almost 200 options. So it's not very likely that they all are only interested in these 3. I think it's a lack of information. So I think this is key here to show more professional options and opportunities. And what I also wanted to add about financial education, there is very often a focus on managing the expenses, but not so often a focus on generating income. And sometimes it's very hard to cut costs, especially in times of high inflation. How can you save if everything becomes more expensive? The only thing that you can do is make the most of what you have learned, and make the most of your potential and of your knowledge and of your interest, and try to have a better income. And this also starts at school. And if you're not informed well about your professional opportunities, because sometimes teachers of your own school do that. And if you're a good student, they have no interest that you leave school and do something else. They have an interest that you stay in that school, no matter if that's an adequate choice or not.
Absolutely. Just looking, as we look to the future, and we heard from the commissioner about what they are doing and how important that is. And we've talked less about the role of policymakers, except in that negative sense, perhaps, of regulations that might make some of the things you're trying to do more difficult. But she talked about the role of financial institutions and how important it was, and how much, she thanked you. And I really wanted to ask 2 questions. My first would be, what more do you need So Caroline, coming to you and I'll give you a chance to respond. What more do you need from the policymakers to support the work that you're doing? And for each of you, it's the same question I really asked, and it's a key priority, and it can be for you in the work that you do, if we are to address these issues, and they're urgent now. We're in times when it's really urgent. So a key priority, and what do you want from each other? So what do you want from the industry, Petra? And what do you want from the regulators, and your own priority for action? Let me start this time with Bettina, because you're the neutral. You don't want anything from either of them, but what do you see as key for the policy side and for the industry side of all the things we've talked about, if we're to get this right?
I think if we really want to close the financial literacy gap that we have in the population, it's important that there's, to some extent, financial education implemented at all types of schools. So no matter which school a student chooses, he or she will have basic financial education. So it doesn't matter in which families these children were born, no matter if rich or poor, highly educated or not, each and every student should receive a certain basis of financial education. And then afterwards, I think financial institutions can come into play, because it's not very likely that this basic financial education will be sufficient throughout your life. That's not very likely. But I think also for financial institutions, it's better to interact with people who have already basic financial knowledge than start from the very beginning explaining them very basic things. So I think if you want to make financial counseling more easy, and also the interaction between people and their banks or other financial institutions, it would help to keep regulatory requirements at a reasonable level, because if you have a 20 or 30-page contract, you can't really assume that this is read carefully and understood in depth. So I think you should keep that at a certain level.
It's about that basic foundation.
Yes.
If you don't have those, then they can't later on.
Absolutely, absolutely. And they would have to give so much advice. Also, if you have a look at advertisements for financial products, they are mostly about well-being and feeling, because they can't really give you real information due to regulatory reasons.
Or you get the thing that certainly I listen to the radio in the UK, where you hear an advert and at the end they say in incredibly far, because they've got to say, so normal T's and C's applies. Remember, investments can go up and down, and they're speaking so fast. I doubt anybody. It's a bit like when it says, do you accept the terms and conditions? How many of us, when we update our phones or whatever, ticket? It always makes me laugh. To be honest, I think actually that's almost worse than useless, because they're complying with the rules, but in a 30-second ad, they've done it in 2 seconds. So, but it's just a personal thing. I've always thought, does that actually ever affect anyone? For you, Caroline, the key to really addressing the issues we're talking about, to building on what the things you've been talking about, and what do you want from the policymakers, regulators, and what do you think you as a sector need to do now?
Yes, so I have maybe three wishes or key points to take action on it. So the first thing is definitely the starting point in the schools. Our access to school must be a lot easier. For example, so when school starts, we give a starting package to the kids, that they get a bit of use to what it is to handle it, and we have less support and more discussions by doing this currently. Then I would like to see the integration of financial understanding and education with economics, that has at a certain point to be integrated in the school system. Otherwise, we are then at the beginning of our discussion, what are the risks? So what does inflation mean? What does the rising interest rates mean? So this has to be at a certain point linked to each other. And then from the banking sector, I definitely think that we need a regulation that supports this and not is too much regulated than helping, because that is what the current status is now. And then we see, for example, a lot of men as women that they start going to fintechs, because obviously it seems to be a lot easier there, but then they lose their money because then they don't see all the risk. And of course there's less regulation, but there must be a way of a good and a good regulation, but that is supportive. That would be really my wish. And for me, from me personally, but for me as a financial sector representative, I think the dialogue with the regulator should be more intense, and we will bring up more solution focused meetings to say, look, this is the problem, that could be the solution, and not only discussing. The commissioner said it very well in the beginning, not only solutions for the problems, for solutions for current problems.
I must confess, I'm very struck. I moderate quite a lot of events in this sector, and this is a conversation that in broader regulatory discussions has never been had. I've never heard it raised by anybody saying actually financial education matters, men and women, and do we have a regulatory environment that's fit for financial education? So for me, fascinating that we're actually talking about this in a broader context, never mind specifically for women. Petra, you have the last word, your key priorities. Where do we go from here?
Key priorities. And what would I like industry to do? Maybe starting with that. And I'm trying to make it very practical. If throughout Europe, during Global Money Week, with the help of anyone working in financial industry, just using 1 hour of their time to go to a school, but at least in that 1 week, we reach every school child, at least up to 16, with a class that they get every week, that they start to recognize as a class on savings, but also on bank, how banks work and why it is important, and how that in the end also brings to you. That would be helpful. And if you could do that under a white label, you avoid the whole discussion of banks wanting to have. But if as a banking community, you could organize that, and you should ask also the insurance community to do that, I think the number of people that work in that industry can easily reach every school child every year in that week. So I think that would be something very concrete to do. My personal priorities, if I make it really on my agenda, it's called value for money. It's a supervisory topic, but it is just really strictly supervising that every insurance product and pension product that is sold to a consumer delivers value for money. So it's sold to the right consumer that actually has use of it, and whatever is paid in will come, and more will come out. But you look at costs, you look at commissions, and you look at it being the right target. This is a key topic for us. It's further developing, and I can say there's a need to have that as a key topic, because there are still a lot of products out there that are not offering value for money or not enough. So that is, and so industry can step up there as well. My final key priority, and I'm now in my role as chairperson for a year, and I've included it from the start, is that I too often find that financial inclusion is about education, and it is somewhere there, and here we are supervising. I want it to be together, and I think it is extremely easy to do so, because for me, financial health, and here I follow the definition of the UN Special Advocate for Financial Inclusion, Maxima, but it's financial health is about being able to understand your finances, that's the education part, being in a place that you can actually currently manage, so you have enough and you understand, being able to deal with sudden moments, so that could be savings, that could be in insurance, and having faith in your financial future outlook, and that includes pension. But those are the 4 pillars of financial health. If you embrace that, then having value for money for a pension is part of financial health. Thinking about insurance and having the right insurance sold, and the insurance actually paying out when you need to, and not having gaps in insurance, that is part of financial health. Education for sure is part of that, and being able to understand that financial health is a very logic part. It's so much more visibly part of the work we do. And that is one of my personal goals, not only for this year, but for the next to come.
Thank you so much. And thank you to all 3 of you for a great discussion. Will you join me in thanking end of our session. Please feel free to go and return to the, I would say the comfy seats, but actually these are probably the comfy seats. Thank you very much. But before we go, just want to reflect a little bit on what we've been discussing. And to do that, delighted to welcome Michelle Schonenberger, ESBG advisor on regulatory affairs and the person who has made today happen. So first of all, Michelle, thank you very much. I hope it has delivered and met your expectations. You put so much work into preparing it. So thank you for that. Can you just take us back? We heard from your president this morning, this at the beginning of the day, but for you, why has it been so important for you to host, to organise this event?
Thank you very much, Jackie. I think financial education is one of those topics that we should be having a conversation about all the time. It should be always on the table. Every part of the regulatory work that we do, we should be looking at how financial education can be integrated in order to make sure that we include it and have this possibility of making sure that it's big. A lot of our financial education programs that we have among the members, they have been around for a long time. Some of them go back 60, 70 years, and they get updated, you know, regularly in order to increase all of the, in order to make sure that it's completely up to date, taking into account all of these new buzzwords that we've heard throughout the morning, things like sustainability, things like financial inclusion, things like digital progression that has been happening in years. And I think that for us, ESBG, and for me, myself, the conversation around financial education is one that we really should be having a lot more regularly, whether it's within families, within schools, or even later on in life through the banks.
And that point you make about constantly updating, constantly responding to these new challenges, or indeed new developments, new products, we've talked about a lot. The Commissioner mentioned earlier World Savings Day, which I think is coming up next week, is it? What is this? I'd never heard of it. What is it?
World Savings Day, it's one day every year. We host it on the 31st of October, and it's when ESBG members and our sister organisation, WSBI, work together on projects to boost the the knowledge of savings and the importance of savings. We've heard already this morning this phrase, saving for a rainy day. And this is a really important point, not just for a rainy day, but also for any unexpected financial shocks. And if we start working with children in schools or just through the banks, the children of the clients, then we can start the financial education process early on, you know, handing over a piggy bank when we were using cash a lot more a few years ago. I think more recently it's digital, the apps that they have in order to be able to progress.
So we had mentioned earlier from Petra, I think it was about European Retirement Week, World Savings Day, a day when the focus is on these issues. So an opportunity for you through those projects you were talking about. Just a final, in terms of, you've been listening to the discussion all morning, what for you, what will you take away from it? What for you are the most important messages that came out? And as you look to the future, what do you hope for?
I have to say, I very much enjoyed hearing Petra's new 3 things of this financial education, driving license, and birth control. I think this is a new phrase that we have, rather than when you leave the house, you've got keys, phone, and wallet.
Yep.
You end up with these new 3 things that you have to take with you. But more seriously, I really enjoyed the discussions this morning, hearing about this idea of mentoring positions coming up through the whole life cycle of an employee in a financial institution, in companies. And it's all part of the financial education, not only in your own finances, but to be able to be moving into roles where you are able to pass on knowledge to other people.
Thank you very much, Michelle, and thank you too for organising and putting together such fantastic panels. Will you join me in thanking Michelle very much? That is it. For those of you in the room, and apologies to those of you online, I'm going to make your tummies rumble now, because if you can stay, lunch will be served. And I just wanted to tell you a little bit about where your lunch is coming from. It is coming from a Brussels-based catering company called Yala Nakaul, which was founded by Rami Amildani, a Belgian national of Syrian origins. And this company works with migrant men and women who have chosen Belgium as their home, providing them with skills and jobs and financial independence. So a really important company to support as well. So if you can stay for lunch, please do. Thank you so much for being with us. Thank you to those of you who joined us online. I think this is a conversation that will run and run. And it's certainly something that in my future events that I moderate in this sector will always be an element of what I'll be asking people about, thanks to the inspiration and what I've learned this morning. So thank you all very much and bon appetit.